All right, guys. So Kevin Walsh is about to speak. So just remember that we had a dovish inflation meeting. So hopefully this one, let's see how it goes if he's going to give us anything. I think they're grilling him pretty hard about it. So we're going to be looking to see if he's dovish or hawkish, right? Is he going to be leaning more towards rate cuts, helping the people, or if he's going to be more concerned? Uh, yeah. I'm gonna put it up for you guys so you can hear it. All right. So I'm a Warren. I don't like her, but I think she's gonna be the one to grill him. So let's see how that goes. But let me know if you guys hear it.
Telling Americans their concerns about the cost of living are made up. Lower interest rates would provide some relief to families, but the Fed hasn't lowered interest rates and may be forced to raise rates even more, all because of one man, President Trump. Now, the president knows this. So instead of changing course, he wants to take over the Fed. Installing you as Fed chair was a critical part of his plan. You reportedly told the president exactly what he wanted to hear in your Oval Office interview, and Trump confirmed it afterwards, saying, quote, Walsh thinks you have to lower interest rates. Now, for your part, you were the only member of the last Fed meeting who declined to submit economic projections that are supposed to show how the Fed's decisions under your leadership are likely to affect American consumers and American workers. People might look at that and conclude that you don't want to tell the truth about inflation under Trump. Trump may have you in his pocket, but he will not stop until he controls the Fed. And he just needs one more seat to do that. And that's why he has had his Department of Justice open bogus criminal investigations into both Governor Lisa Cook and former chair Jerome Powell. And that is why he illegally tried to fire Fed Governor Cook. His own Supreme Court recently blocked the firing, at least for now, but Trump has vowed to try again to fire Governor Cook. The fight for control is a fight over interest rates, but it is also about corruption. President Trump likes to play king, and the Fed offers many appealing.
Well, for this one, I would like to see why he didn't give a projection. So based off of the questions, that's how we could tell. So it was a good question, like why you didn't give your projection, So this is not him speaking to news outlets. He's speaking to Congress. So he should give us a like, hey, why you didn't give a projection? So what, like, we're gonna see what he says. It's kind of interesting because it's like it's contradicting themselves. You could tell that they're contradicting themselves because uh yeah, she's on his ass, but how they going to be like, oh, you're trying to listen to Trump and cut interest rates? Then the guy before is like, life is hard for people. Like rates are too high. You see what I'm saying? How they're contradicting each other. So Trump wants him to cut interest rates, but then people, they're like, well, lives are hard for people. So why aren't you cutting interest rates? You know what? Trump's a dictator, like blah, blah, blah. It's like, they don't know, like you can see how they're contradicting each other. Like Trump is trying to control the Fed. If he is, he's just trying to cut interest rates so it's easier for us to invest, easier for us to have homes. But they're like, well, inflation is too high, but lives are hard for people. So what are you going to do about it? And if he cut interest rates, they're going to be like, oh, you're doing it because of Trump. So that's the part where it's contradicting each other. But I like her because he might not answer because once the time is up, the time is up. But let's see what he says.
Thank you, ma'am. Chairman Walsh, thank you for being with us. The floor is yours. 5 minutes.
Thank you very much, Mr. Chairman, Ranking Member Warren, other members of the committee, good morning. It's a privilege to join you. It's my first appearance before this panel as chairman, and I'm particularly honored to represent my superb colleagues from across the Federal Reserve System. In submitting the monetary policy report, I can't help but think of a long line of central bank chiefs who came before the Congress in keeping with the Federal Reserve Act. And I can't help but think of the best of the Fed's traditions. As a country, we just marked our 250th year. And when Americans count our blessings, we can include an economy predicated on the brilliance of our constitutional design and system of ordered liberty, an economy without equal in all it's done for human flourishing. Some forms of communication, including some that the ranking member referenced, are discretionary, but not this one, and for good reason. It's a prudent and wisely conceived obligation designed to keep the Fed responsible, accountable, and faithful to the mandate that you gave us of full employment and price stability. These obligations are of a piece with the Fed's rightful independence in the conduct of monetary policy. Today, we're at a hinge point in history, and it's up to each of us, myself included, to meet this moment. The Fed's number one objective is to get monetary policy right. That's our clear and constant aim, the star by which we steer by. And if we get policy right, and we will, the inflation surge of the last 5 years will be a thing of the past. Just a month ago, I chaired my very first FOMC meeting. My colleagues and I recognize that high inflation has been an undue burden on American households and businesses. And while monthly fluctuations are inevitable, especially in an unsettled world, underlying inflation over longer-term horizons is determined largely by monetary policy.
Watch out also for geopolitical headlines. Just show you guys here. It's not saying anything yet. So we can see that talks between the U.S., Israel, and Lebanon has concluded after 2 days of fruitful and positive discussions in Rome. All right. So it concluded, and so far parties agreed to structure guidelines expected to be implemented in coming days. So it seems positive. So that's a good sign too.
Activities expanding at a solid pace.
Yeah, like that's what he's doing.
Recent developments, household consumption.
Like they all know it, but it's just like he's not answering. Like why you didn't give your vote in the last meeting? Well, our job is to lower employment, help employment, help growth, and lower inflation. It's like you're not giving an answer. Your shit is crazy. But they can't force him to do it because he's already in, so they can't force him. But so far, positive news. So we should at least see dollar lower. Remember, we're gonna have to focus on oil. Let's see if oil pushes lower too, and then let's see if like equities could rise. I'm very shocked that Nasdaq. I know it's the tech itself is probably taking. I don't really see anything really. It's only Intel. So far, it's Intel and Tesla pushing to the downside. That's why I don't really trust this downside move in Nasdaq yet. But yeah, just let's see if this support could hold. I'm looking at this support on Nasdaq. Let's see if this area could hold. Even if it pushes lower, I want to see it go right back above 29,600, and then we can see if we get some upside. But yeah, he just sounds like a robot. So hopefully they continue to grill his ass so he could give an answer.
Subject worthy of equal attention. Where productivity growth has been strong. And I'll note that this productivity growth predates gains from AI adoption. America's labor force appears to be broadly stable. Job creation has kept pace with the workforce. The unemployment rate low, and has changed little, quite frankly, over the last year. We're seeing relatively few layoffs and only slight variance in the rate of job vacancies. Solid growth in nominal wages, too. I've been heartened by the welcome I've received and by the encouragement of my colleagues. We have a duty to point the institution forward, to take a fresh look at current practices, to make sure we're serving our objectives, and we're going about it systematically. As the chairman referenced, I appointed a task force in each of 5 areas that are central to the conduct of monetary policy. I'll just reference them and close. First, Fed communications. Second, our balance sheet policy. Third, our use of existing data. Fourth, productivity and jobs. And finally, the Fed's inflation framework. Our purpose here is to make better decisions in the conduct of monetary policy and put these years of high inflation behind us. We are the Federal Reserve, Mr. Chairman, and as determined as ever to fulfill our mission. Thank you, and I welcome your questions.
Thank you, Chairman. Each member will have 5 minutes to ask questions and get answers, and I'll start that off. And I'll start off with your working groups. I think credibility equals transparency. And the names that I've seen on your
What if employer-sponsored insurance didn't have to be group insurance? Group health plans often come.
activity and AI tells me that you're serious about
Yes,
getting
it's optimistic.
real world experience and expertise involved in making decisions at the Fed. I want to give you just a minute of my time to walk us through perhaps 1 or 2 pieces of that, as we talked about the importance of having contrast on the committee, on the working groups. Really important from my perspective. I think it lends itself to having more confidence in the Federal Reserve. I want to give you a minute to talk about one part of it, and then I want to move quickly to AI.
All right, let me be brief, Mr. Chairman, but you're highlighting something that's awfully important. All institutions, including the Federal Reserve, which I am so proud to lead, filled with great people, on occasion, we need to bring new ideas to the fore. And after 63 months of inflation above the Fed's target, it struck me that any new leader should arrive at this organization and look to the very best minds that we could find. There's a lot of great ones at the Fed, but there's a lot of great ones that aren't even in the economics profession. And I reached out to 15 people who I have known and trusted with a diversity of views to see whether they would take the most important questions that are going to be the determinants of monetary policy and the determinants of the economy next 5 years and see if they could sharpen their pencils and do their best work. It's a move towards transparency and new ideas. I'll just give one example before turning it back to you. In the last couple of days, we've gotten data on the consumer price index, today on the producer price index. Any central bank would be happy to have the data going in the right direction. My view is these are all imperfect measures of the state of underlying inflation. So one of the task force is going to see whether we can do better, have better data from external sources, and even better ideas as to how important organizations like the Bureau of Labor Statistics, the Bureau of Economic Affairs might think about how they could do a better job in an evolving economy.
Thank you. We met just a few weeks ago with Dr. Phelan, who's slated to be the head of the president's economic advisors. And we talked a lot about artificial intelligence and the impact it will have on our economy and whether or not it will destroy jobs, create jobs. And ultimately, at the end of the day, his conclusion was it'll create more jobs. Artificial intelligence has an opportunity to change how we do so many things. And much of the debate for me can be bifurcated into automation, things go away, and augmentation. People make more money because production goes up. And you've argued that perhaps there's a way for us to see a reduction in interest rates because of
NASDAQ is just bleeding right now.
One of the things standing in the way of that conversation is what's happening in South Carolina, where data centers are.
Seems like markets is very disappointed. We don't got no negative headlines.
South Carolina.
All right. So recent inflation data is imperfect gauge of underlying inflation. It's not really an answer.
About beating China in this AI race might come down to something as important.
But so far, global equities is taking a hit. Like it's not just NASDAQ, also the Japanese index, the European markets. So like we're seeing a lot of like everything is really pushing to the red.
I can't think, Mr. Chairman, of a more consequential change to the U.S. and global economy in my adult lifetime than the surge of investment and the potential in around AI. That's part of the reason why one of my task forces is to focus on what's the effect of this general purpose technology on both parts of the Fed's mandate, on ensuring stable prices, but also on full employment. You gave us both parts of that.
Yep.
We don't have any legislative orphans at the Fed. There's no disfavored part. I would say it is a huge opportunity, but it's not without challenges. I'll make 2 other brief points. I think the United States is extremely well positioned to be at the cutting edge and extract more productivity, which should be good for U.S. companies and U.S. workers than any other country in the world. Any other country would exchange positions with us in a moment. Second thing is, I do want to make it clear that in the near term, I think this investment is probably quite good for jobs as we're building out the infrastructure. And over the long term, my best guess is that this will improve American productivity and will improve the real wages and will help us on full employment. But between the short term and the long term, it can have a disruptive effect. And we're attuned to that. And it's part of the reason why I wanted to shed some new light on it with some outsiders.
My time is up, but I will submit one question for the record around the issue of indexing our regulatory thresholds. We've seen so much growth in the since 2019 that our institutions might need to see a little recalibration on the thresholds that we have put upon them. Ranking Member Warren.
Thank you, Mr. Chairman. So the Federal Reserve has long been plagued by a culture of corruption and coziness with Wall Street. Over the last 5 years, at least 6 senior Fed officials have been implicated in serious ethics scandals related to personal stock.
Yeah, it's a possibility.
Self-dealing.
Yeah, I was also like reading you can look at the chat in the bottom too of the video. Like a lot of them is looking for the gold cells as well.
$1 billion worth of shares in private investment vehicles called the Juggernaut Funds and THSDFS LLC. And you refuse to disclose the underlying assets to the Senate and to the public. You say now that you've sold those shares. In other words, somebody wrote you a check for more than $100 million days before you entered office. Chair Walsh, who wrote that check?
Senator Warren, this is a discussion you and I had in the public square 7 weeks ago, and I'm thrilled to tell you that I have fully honored the obligations I had under the agreement I had with the Office of Government Ethics.
Yeah,
and there is continued disclosure, which I'm happy to make as consistent with the agreement.
Specific question. Who gave you $100 million right before you were sworn in? Was it a billionaire who has business with
This is fucking crazy, guys.
Druckenmiller, who's made billions of dollars betting on what the Fed does? Or was it a different billionaire? Who gave you the money?
I will fully comply with the Office of Government Ethics. And well, it is an answer actually, Senator, because there are obligations and I will satisfy the
$100 million. He could just say it's not true. So why he's not saying it's not true?
Another incident. As you know, the Fed
holy shit.
Senior Fed officials are prohibited from talking about economic issues with outsiders. The idea is to, quote, reinforce the public's confidence in the transparency and integrity of the monetary policy process. In other words, no one gets some special insider information from the Fed. But shortly after your first FOMC meeting as chair, right in the middle of the blackout period, the Fed's vice chair for supervision, Michelle Bowman, was reportedly the featured guest at a secret dinner hosted by Bank of America for its hedge fund and Wall Street clients. At this closed-door dinner, she reportedly spoke about both monetary policy topics and regulatory policy. Now, I've called on the Inspector General to review her conduct, but you're the guy in charge. As chair, you set the tone on culture. Did Vice Chair Bowman provide any non-public information to the attendees?
He could just say no, like that's not true. What the hell? Like this dude is like, I ain't gonna. That's crazy.
To open comment periods.
Senator, I agree with one of the premises of your question, which is I do set the culture.
Good.
After my very first week at the Fed, I sent a letter to the 21,000 people at the Fed outlining our culture.
I appreciate that, but we have very limited time and a very strict chairman. So can you just answer the question about the vice chair and her secret meeting?
Sure, I'm happy to the extent I can share it with you. The vice chair has been an excellent colleague in my first 7 weeks. I'm aware of the letter you sent to the Inspector General. Out of an enormous respect for him, his investigation, what he chooses to do with it, I'm going to leave to him to do without trying to micromanage that.
So
I'd be interested in the judgments that he comes to.
So you will support his investigation Have you made your own investigation? Did you ask her if she spoke at a secret meeting during the blackout period?
I agree with the suggestion that the Inspector General is an independent actor, and I'd be
know.
very interested in his decision.
You just said you're the guy in charge. Did you ask her about the secret meeting that took place? Did you ask her?
I can answer a simple question, which is, I wasn't at the meeting. I don't
understand.
know the facts.
No one.
But I'd
did
be
you-
very
did
interested
you
in the
ask
fact
about
finding
the
being
facts?
done by an
Did
independent
you
Inspector
care
General.
enough to ask, how can you be chair and not ask your own vice chair whether or not she violated the blackout period, violated the law?
I think it'd be inappropriate for me to prejudge facts that are being discovered by an independent actor.
Judge them if you don't ask.
Well, I don't know how to prejudge them if I wasn't in the attendance of a meeting.
Did you ask?
She's been an excellent colleague.
Did you ask?
I've asked her a lot of
Did
things
you
about
ask?
supervision and regulation.
Yeah,
We've been busy doing a lot of real work
Don't
for
wanna-
the last 7
I gotta say, I'm gonna take the same time you did. I just gotta say,
You hope so.
the tone that you are setting is one that seems to invite corruption, and that's gonna be a real problem.
Mr.
Thank you.
Brown.
We've had 7 weeks, Senator Warren, and we've set a tone of performance, accountability, responsibility.
The
and
fact that he got a check for 100 million
Thank you, Mr.
and he
Chair.
didn't even deny it.
Mr.
But
Marsh, welcome to
it's
the
a
meeting.
it's
Thank you.
difficult because if he denies it, then
let
it
me give you
shows
an
proof
opportunity.
that
I
somebody
think
handed him a
that-
check.
that I've got
You see what I'm
questions
saying?
on
So like he
14,
can't
3,
answer that
3,
because
4,
regardless,
3,
you're fucked with
before
that
we get into
answer.
that, I
So just to
think
give you
you've been
guys clarity,
basically harassed
so
and
his he can't
making
answer it
accusations
because
to
if he says
Let me give you
like he has to blatantly be
perhaps
like, I don't know what you're talking about. Nobody has ever handed me
some
something.
of this stuff.
But
Anybody give you $100 million?
No, Senator, no one did any such thing.
Possible that you may have had assets that.
All right,
were
there we go, you see.
Based upon an agreement that you had, as you became the nominee for the chairmanship.
Yes, I had earned assets over a long period of time and went over and above any ethics agreements and have sold or in the process of selling, have nearly completely sold everything that I had earned during that period and have rolled those into the equivalent of cash and T-bills.
So basically, away from investments based upon the market.
now Warren did her thing. I like that. He probably just being a dick
Yes,
and just don't want
exactly
to
right. I
answer
thought
her
that
question
was the
to be her,
prudent thing
get
to
her
do,
pissed.
given the responsibilities and the importance of setting the tone at the top. Culture is the big driver of a lot of things. And in my first 7 weeks, Senator, we're doing our very best, the best of the Fed's traditions to get the culture right, to get the strategy right, and to get policy right. And if we can do those things, all of which are to the left of the decimal point, might not be of such great interest to people that are trading on Wall Street. But I think the decisions we make to the right of the decimal point can be better, so we can do a better job of fulfilling the mandate you gave us.
Yeah, the ranking member had asked a question with regard to another member on the committee, Nikki Bowman, and you indicated that if there was an accusation being made as to an inappropriate meeting, that if the Inspector General was doing it, that you were going to be hands off on it. Seems to me that that's pretty appropriate. Because if you would have gotten involved in it, the accusation from some members on this committee would have been that you were trying to influence it.
Yes.
Can you talk a little bit about the logic? Am I on the right track with regard to the reasoning that you have for allowing the Inspector General to do the job that they were asked to do in the first place by members on this committee?
Yes, Senator, you're exactly on the right track. I'll just say more broadly that my fellow governors, my Reserve Bank presidents, they've received me incredibly warmly. I admit that I show up with a lot of ideas for reform in monetary policy and supervision and regulation and payments. I've only been there a short while, for 7 weeks, but instead of an institution acting inert, what I've found is my colleagues are really open-minded to change. What I found is we're going to have a good family fight. I'm not imposing ideas. That's part of the idea of the task forces the chairman referenced. But we're going to try to be better at our jobs, fulfill our mission, be accountable, be responsible, and do it all with the utmost integrity. That's my intention. We're early into this. I don't want to prejudge outcomes. We made a lot of progress in a short period of time, and frankly, I'm proud of it.
I like the idea that you're putting together working groups. I think that will give an opportunity for a fresh look at a lot of things going on. As I shared with you in a phone call earlier, it's not a matter of being necessarily vindictive or angry with previous chairs or previous members. It's a matter of making things better for the American people. And that's really what we ought to be talking about today. So let me just, in the minute and 14 seconds that I've got left on mine, let me talk a little bit about Basel III in particular. I think you and Vice Chairman Bowman and the respective financial regulators, I think you've done a good job in terms of your roles with regard to the Basel III re-proposal that was issued this March. The 2023 proposal would have substantially increased common equity capital requirements for Category 1 and Category 2 banks by approximately 19%, failing to strike a balance between maintaining the resiliency of our banking system and doing so without hampering lending. I think this is a really critical item, and next to what artificial intelligence is going to do in terms of our productivity, I think it's one of the biggest issues out there. With the June 18th comment deadline now behind us, are there any other categories of feedback that you're weighing more heavily than others, such as the adjustments to leverage ratios or anything along that line? And if I could, is there going to be a go live date this year sometime? Any idea when you might actually be able to talk about when this thing is going to go public for us?
Senator, well, thank you for your question on supervision regulation. As I mentioned before, I've shown up with a lot of ideas for reform, not just in monetary policy, but in supervision and regulation too. When I was before this committee some 20 years ago, there was a debate about what the Basel process should be. Boy, we should get to the bottom of that 20 years later, and we should end up with a set of reforms in the United States that makes our financial system and our banks safer, sounder, and more competitive. It is that competition which provides better and more agile credit to the real economy. The Basel endgame, Senator, is not America's endgame. I am happy to work with international regulators to try to find common views, but we're going to do the right thing for the U.S. economy. As you mentioned, we're out for public comment. I'll be very interested in the comments before we go final with the proposed final rule.
Let me just say, this is already off to a good start. But we're going to stay around 5 minutes, period. Thank you. Senator Reed, the floor is yours.
Thank you, Mr. Chairman. Chairman Walsh, I want to see if I put a cap on this discussion between Senator Warren and Senator Rounds. When will you disclose who brought your assets? When?
I believe there's periodic requirements under the ethics laws, and I'll fully comply with them. I think the next reporting requirement is at some point next quarter or so.
And you will fully disclose who you sold your assets to?
I'll fully comply with the law and the ethics agreement.
Thank you. AI is making a huge impact on everything we do, particularly the banking system. And as you're aware, an interagency governmental group, Commerce, Treasury, Energy, et cetera, has authorized the major banks, the 8 major banks, to use Mythos to evaluate their security. Would you agree that it's important for all financial institutions to have access to these types of AI?
Come on. Just got us back to the game. Just get them delivered, you donut.
Or cyber vulnerability?
Yeah, tech is taking a huge
Yes,
hit.
the broad financial
Definitely. We also got a headline that came out.
I wouldn't want to just isolate Mythos, though. The other large language models have rise.
Just show you guys.
Fission frontier has changed even in the last month. But
So we see that he's going to release a statement, and I believe when I saw it, it was going to be at 2.
Patch any vulnerabilities that we have.
What are you doing to?
So just be aware of that statement to come out. Dell is taking a hit. So yeah, NASDAQ is just tumbling right now. No clear direction. Yeah, exactly. Like it's just there.
Share the sentiment, Senator Reed.
No, they're hammering him because somebody bought his assets. So they $100 million worth of assets is crazy. So this guy is like but they trying to figure out like who paid for his assets, what billionaire paid him, because Warren started it up saying somebody gave you a check, but the reality is that he had assets that he sold to somebody for $100 million. So it's showing corruption in the Federal Reserve, stuff like that.
I want to make sure that we're as protected as we can be from foreign actors that want to do us harm.
Well, let me stay with AI, but change the focus a moment. Recently, Governor Waller and New York Fed President John Williams have warned that AI investments may be increasing inflation, and many economists have similar warnings. So are AI investments current drivers of inflation?
This is one of the good family fights. Let me give my own view on it, which might be somewhat nuanced from the way you just described it and some of my colleagues. The shock of AI, the supply shock of AI has an effect on demand and supply. We see the effect on demand much more quickly. We see it in the capital investment I referenced. We see it in the prices of chips that are going up. We're inferring, which is just a fancy word for guessing, when the effects will happen on the supply side of the economy. I don't view a one-time change in prices as necessarily being inflationary, because I think there's a supply response. In that way, this is different from a foreign conflict and what it might do, which tends to reduce the supply side of the economy. Will it increase measured prices over the course of the next 12 months? I suspect it will be. Whether that's inflationary or not, that's up to the Federal Reserve, and we're going to have something to say about that.
Okay. Now, one of the interesting things about our economy is becoming more and more productive. But one of the disappointing things is that household pay is not rising relative to that productivity. And we're seeing less benefit from productivity gain. So what's driving this trend?
Yeah, it's a great question. I don't have a perfect answer to it. Like you, we think a lot about real.
He just said that the inflation is pretty much a one-off, and now he's saying he don't even know what's causing the inflation to rise, which is stupid.
Real take-home pay would be higher. That's just the arithmetic. Your other question's a broader one, which is what are we going to see the productivity improvements lead to a surge in wages? Wages have moved up at a reasonable pace, but it's likely that as productivity moves up more, we should see wages move more. Getting that timing right, understanding when that happens, that's a puzzle, and it's a puzzle we're going to continue to work on.
In the last 10 seconds, will AI eliminate jobs at a catastrophic rate?
Yeah, exactly. So I could see like why global, but equities was pushing lower before they started this shit. But this does show the independence is not there, that the hedge, that these institutions is what's controlling the Fed. No matter how he answers this question, it's not like he could go to jail or like stuff like, you know what I mean? Like it's the Federal Reserve is not the government. So they would just have to just do some illegal shit just to charge them with something. So it's interesting to see how this goes, but if the Feds is getting called out for the corruption, imagine other central banks, to ones we don't know about. So just think about that. But yeah, this is just Hollywood, guys. This is not tradable opportunities, but this does show a little fear of the independence. And we've been seeing equities push lower. And that does show that just how the meeting is going. Like the entire markets is red. Gold is lower, dollars lower, equities is lower. Like everything is just bearish, so it's no clear edge here, so just take profits, or like if you're in trades right now. I know that we're going to get a meeting later about the US and Iran situation. Let me see if I know I saw like 2:00. I gotta try to find it. But yeah, this is pretty interesting.
I don't want to sound dismissive of it. The surge in prices is real.
I know I saw it 2:00. I don't see it.
Successful companies in the world investing in property, plant, and equipment and doing a share buyback. So I'm encouraged by it.
But yeah, this is fucking crazy, bro. Like, it shows. Iran called a while ago. They want to make a deal. Trump said that about an hour ago, but markets is not reacting to that. But yeah, we're gonna see what the Iran top negotiator. He's gonna release a statement soon. So we'll see what that statement is, and that's probably they probably already got the statement, and that's why we're seeing this reaction. which is kind of crazy. But yeah, they probably already got the statement. But yeah, looking at US 30 is market fear right now. Fear is taking over. But oil, but the thing is oil is bearish, gold is bearish, dollars bearish, equities are bearish. Everything is pushing down. So so definitely a market to just be patient with. Yeah, I told you, glad you took profit, right? Yeah, I'm still at break even, but if I get hit at break even, I'm okay with that.
Based on thresholds that haven't been updated since 2019. At the same time, the Federal Reserve continues to rely on those categories and other regulatory frameworks. So my question is, how are you thinking about updating these tailoring frameworks when it comes to what banks can expect to see and proposals in the future?
So it's a great question, one I take seriously. To be candid with you and the chairman and the other members of the committee, monetary policy has distracted me a bit in the first 7 weeks, but the Federal Reserve chairman is supposed to be the chairman of monetary policy and payments and consumer affairs and supervision regulation. But I can tell you this, Vice Chairman Bowman has been working on these initiatives. She has briefed me about them. And broadly, I'll step back and say modernizing our banking system, streamlining regulations so that the rules that apply to the systemically important financial institutions are not one size fits all for every other. The secret to the American economy is we have a few thousand banks and other providers of credit who know their smaller markets bigger. I'd rather have that system than what most of our G20 peers have, where they have a half a dozen institutions implicitly backed by their government. I think reform is coming to supervision and regulation. I have my own ideas that might be as dramatic as I've already shared on monetary policy here. And I think the sooner we can get to the bottom of it, the better. If I could say one more thing, the reforms we've been putting in place over the last 15 years coming out of Dodd-Frank, as we learned in the Silicon Valley Bank example, and the First Republic example, they didn't work perfectly. My predecessors had very little choice but then to do another overall bailout. We don't want that to happen again. So we want to tailor the rules and the capital so they serve the best interests of the US economy, which I describe as a system that is safe, sound, and competitive.
And I just hope, given what you've said, we double down on reviewing the framework. We know how important tailoring is, and also just the need for regulatory certainty. So thank you for that. In my last remaining seconds, I just want to say thank you for your commitment in the first 7 weeks, almost 2 months. You said it earlier, but to performance, to accountability, to responsibility, and to integrity. Appreciate what you're doing and look forward to continuing to work with you.
Thank you, Senator.
Senator Warner.
Thank you, Mr. Chairman. Chairman Warsh, it's good to see you again. 7 weeks in, you got a hell of a job. Inflation's still too high. How you predict the president's chaotic foreign policy, wars in the Middle East. I'm going to come to an AI question, but let me be clear. As I said to you yesterday, I didn't vote for you, but we're going to find a lot of common ground to work together. I am going to hold you, and I've been appreciative of your comments about inflation, about the Fed's independence, but I think there are many, many common areas we can work together on and look forward to that. I want to hit, when one of the things that most impressed me in our first meeting was your recognition that probably the biggest issue you're going to face is AI. My 2 cents is, I think it is going to have long-term, I agree with you, it's going to be job creation. Very short-term, I think you may see some upsurge in terms of, energy production and data center build out. Years 2 through 5, 2 through 6, I think there could be massive economic disruption, particularly towards new college grads. It's policymakers' job, but if this is going to have the potential effect, I hope I'm wrong, but I'd take a bet with you that 3 years out, we could see 30% recent college grad unemployment. If we see that, what do you see as the Fed's role is in terms of urging your actions, but also helping us sort that out?
Senator, first of all, I appreciate it. I promise to.
Don't say nice things about me. He's got me on a clock. Answer my question.
All right, good. Well, let me just say.
I do indeed.
Let me just say this. I appreciate that you haven't given up on me. I haven't given up on you. I haven't given up on your colleagues. I'm the independent head of a central bank. No matter how people voted, I'm going to be serving all of you.
This doesn't count against my time.
AI. Let me get to the core of your question. I am more confident that there will be a surge in output because the US is at the cutting edge of AI than any certainty about the effect on the labor market in the next few years. The United States will be a winner. That is my informed judgment. But this is a time filled with both challenges and risks. We take both parts of our dual mandate seriously. Do I believe that the productivity improvements over time will be structurally disinflationary? I do. I believe everything technology touches ultimately gets cheaper. Your background, I think, would be consistent with that. What are going to be the effect on the labor markets in years 2 through 5? It's a fair question. The way I would frame it to you on college graduates, if you're a new college graduate, AI is probably native to you. You've been playing with AI effectively since your high school years. I feel as though you likely have the skills and the intuitions the same way that people of my generation or younger were native to the internet. If you've already been in the workforce for a while and you're a little resistant to change, that's where the encouragement needs to be to think about how these skills can make you more productive. These are fair questions. I don't have easy answers, but I do have a task force that
we have to work together. We have to work together on, because if we hit this bump, and I think it's going to come, we gotta collaborate. Now, Senator Reed asked a very good question about Mythos, and I 100% agree. Mythos is already yesterday's news.
Right.
Because these models are coming out so quickly and they pose such security risks. I think it's incumbent, because of the risk it provides to our financial system, that at some point you're going to be, and I'm asking you now, I think personally, I believe we need some level of mandatory testing pre-release because of the potentially draconian and dramatic effects. Now, how long, who's on that panel is critical, but what do you think about pre-testing release regime going forward, more than just the voluntary willingness of a company to come forward?
Yeah, so 2 things. First, these models are in their capabilities are growing at an exponential rate. In technology, we would say hyper Moore's law. It wasn't long ago people sitting in my position thought that the US was a time of secular stagnation. All the good stuff had been invented. Boy, that seems awfully anachronistic. We're moving fast. So what can we do? I don't have, as it currently structured, decision rights as to who has access, but I do have a bully pulpit, as you mentioned, and I'm unafraid to share my views with the Treasury Secretary and others. The cutting edge is moving very quickly. Key institutions are vulnerable. The sooner they can mitigate their vulnerabilities, the better. I'm looking forward to.
Well, I hope that you will be willing to advocate moving on beyond a voluntary regime, because the downside risk. 12 seconds, quickly address the role of all of the Federal Reserve banks and your vision of what the role they should play.
So very quickly, I'll just say this. We should be good stewards of taxpayer money. We should be consolidating functions where we can. But my mental model, Senator,
yeah, like this is just Hollywood, man. Like it's just it's all political. Not really saying much. The beginning was kind of hit the head, but he didn't answer the question either about like why you didn't give a dot of forward guidance. I don't know if anybody else is going to hammer him with those type of questions like Warren did.
We got some good news this week. Inflation was down.
All right, let's see.
That's progress under this administration and under your new leadership about inflation. During the Biden administration, we saw reckless spending that drove prices up and left Nebraska families to foot the bill. 2019, the federal deficit was roughly $900 billion, and by 2024, that was $1.9 trillion. And we saw inflation go up 20%, really stressing Nebraska families at the grocery store. Cleaning out this mess is going to take discipline, and it's going to take reform. Chairman Warsh, we discussed in our meeting also how to implement some reforms, such as process improvement. We talked specifically about Lean Six Sigma and the opportunity there. You promised to have a reform-oriented Federal Reserve, and we're willing to break up or make a break from some of the mistakes of the past. I commend you for that. I want to work with you to see it through. One of the most important places to start is with the Fed's balance sheet, an issue I've consistently raised with other Fed governors. The Fed expanded its balance sheet dramatically during the pandemic, peaking at nearly $9 trillion. Since 2022, the Fed has shrunk it down to about $6.5 trillion in December 2025. And I'm glad to see that the Fed was making progress over the last few years, but the balance sheet is still not down to pre-COVID levels. Actually, the balance sheet is rising again and now stands at around $6.7 trillion today. Chairman Morris, do you see the balance sheet increasing again as a trend in the right direction or the wrong direction?
Senator, thank you for the question. I've been focused on the Fed's balance sheet, frankly, since my last day at the Fed some 15 years ago into the present. I don't want to prejudge the conclusions of this balance sheet task force, whereas the chairman said I put together a team of rivals to fiddle with it, to evaluate it, to come up with their own judgments. But I'll give you my predilections. Monetary policy is made currently through at least two material instruments, interest rates and the balance sheet. In fact, we grew the balance sheet, created quantitative easing when I served the last time in the darkest days of the crisis, because we'd already cut rates to zero. So expanding the balance sheet had the intent of helping markets clear, but it was also another tool of monetary policy. I still believe that is true.
Wasn't that supposed to be temporary?
Indeed, that was our entry principle, was that we would get out of that business. The central bank has not, for a whole range of reasons, gotten out of that business. My general view is, as we think about inflation risks and we think about the conduct of monetary policy writ large, we have two instruments that we should be thinking about. The balance sheet is one of them. I'll make only one other point. Monetary policy needs to be architected, needs to be designed by the policymakers around the FOMC. The plumbing, the operations, how we do that.
Tools from Harbor Freight are doing hard work in real garages across America. Like at Nico's Automotive Shop.
Not the plumbing to drive the architecture. We're going to make a monetary policy decision with respect to the balance sheet. I'm very open-minded to changes, and any changes we make will be welcome.
It's crazy, but his personality, right? Like, even though she was hammering him, like, he didn't change his tone. His character remained the same, which was crazy. Like, some people, like, you could tell some people would have lost their shit, but he remained composed the whole time. Like, you didn't even see him sweat. Like, he stuttered a little bit, but yeah, right. He was like, he just didn't fold, which was kind of crazy. Like, Jerome Powell is the same way. You know, they just had the same composure. Like, what the hell, bro?
The balance sheet can expand when there's a crisis. The balance sheet can also expand.
Yeah, man. I feel like they all media trained. They all went to Harvard. They all went to Yale. Like, they all, like, they go to Harvard, Yale. They go to BlackRock. They work at the government, right? They work for the White House. They all move in circles. They all come from the same shit.
Fiscal policy that I'm comfortable with. So I would like us to have a leaner, meaner balance sheet, but it's a discussion for my colleagues. And I've got three real pros that are going to help us think it through.
All right, well, I have run out of time, and I'm sure the chair will be happy. I'm going to maybe get done before it reaches zero.
Thank you.
But I do have a question I'll follow up with for the record on scams, because this is something that the banking industry is telling me they're increasingly seeing, and it's costing people who deposits a lot of money. So I'll follow up with that.
Senator, we're opposed to scams, but I'm happy to follow up.
Good to hear. Good to hear. This is great. Senator Van Hollen.
Thank you, Mr. Chairman. And Mr. Chairman, we agree on that point. Let me turn to the headline inflation numbers that came out yesterday at 3.5%, above the Fed's 2.2% target. Prices are too high for families and we need to get them down. I think we can agree on that. At your press conference a few weeks ago, you said that higher inflation in part, and I quote, reflects supply shocks that have driven price increases in certain sectors, including energy, unquote. In other words, a reason that we're seeing prices go up is that the supply of products and services has dropped in some areas of the economy, right?
Yes.
And I do think it's important that the public understand the causes of some of these supply shocks. You would agree, would you not, Mr. Chairman, that the war in Iran has caused a supply shock in the energy markets?
Yeah, the military conflicts have caused the price of oil to be higher than it otherwise would.
Absolutely right. And Americans are paying the burden of that as we go. We've also seen supply shocks in other areas. Last year, your Your colleague, Austin Goolsbee, president of the Chicago Fed, said that, and I quote, "A tariff is like a negative supply shock," unquote. And we've seen plenty of tariffs. Obviously, we have the Supreme Court decision that may bring those down over time, the impact of it. But the negative supply shocks have been real and can be traced to the Trump administration agenda. So when you say that supply shocks are part of the reason prices are going up, you would acknowledge that they're the result of decisions that have been made by the president, like going to war with Iran, right?
So what I'd say is particular price shocks happen to particular prices that we don't have control over, but I don't want to suggest we don't have control over inflation in the medium term. That's our job. But screwworm affects beef prices, other things that affect oil prices and milk prices. And I understand that has an effect on people's household budgets.
Indeed, it does. And I think we've seen the price of energy go up by billions and billions of dollars. And the American people are essentially paid for that at the pump and other places in their pocketbooks. As you know, your predecessor as chairman was regularly harassed and berated by the president of the United States on social media with respect to interest rates. At least so far, you seem to have escaped that fate. But I do think it's important that we have an understanding of whether or not the president is trying to influence Fed conduct. I know you were asked recently at your last press conference about any communications with the president. I think your response was, "On the president, I don't have anything for you." Mr. Chairman, was that a yes or a no with respect to whether you've had communications with President Trump?
So I like what I said the first time. Senator, I don't have anything for you. I will say this, though. I do meet with the Treasury Secretary weekly. I talk to him often between that.
Mr.
And I'll
Chairman, I just want to make sure
I'll make my own decisions as monetary policy.
I just want to understand the answer.
This is crazy.
Trump, since you took this position.
I just don't want to be in the business of sharing discussions that the president and I have.
Okay.
I will tell you what I've said to the president repeatedly and said to the Treasury Secretary. They chose an independent guy to do an independent job, and that's exactly what I plan on doing. And I'd like to think over the last 7 weeks, given the decisions we've made and the things we've done, that it's not just words, it's actions now to start to demonstrate that.
So, Mr. Chairman, I mean, I think it's important. I take from your answer, you've had communications, you don't want to disclose the content. Will you commit to do what your predecessor did, which was to release your appointment schedule and conversations with President Trump?
I don't know what the past practice was. I will be in full compliance with the law. As I understand it, there's an ongoing FOIA request on my calendar, and I will share it consistent with the law.
Well,
I believe the first one's already come out.
I think this was this wasn't in response to, any legal requirement forced by FOIA. It was a question of transparency. And I do think, given the president's past record of trying to influence Fed behavior via social media with respect to your predecessor, if he's trying to influence Fed behavior through private conversations with you, I think that needs to be something the public is aware of. And I'm asking you whether you will commit to disclosing when you have conversations with the President of the United States.
Senator, I can offer you this assurance. The president has not, before I took this office, before I raised my right hand, he has not tried to influence the conduct of monetary policy. And if he tried to, I would continue to keep my head down and do the job. I don't have a long record, but I've got a 7-week record. And before that, I had a 25-year record. And I think that should count for something.
I appreciate that. I hope you'll just follow the precedent your predecessor.
Senator Kennedy.
This is crazy. Like, it's like we're watching this now. Just imagine the shit we don't know about in the early 2000s. You know what I mean? When nobody knew what the Fed was until the housing crisis happened. That's when everybody really knew about the Federal Reserve. But nobody knew about it before 2008. I like Kennedy. Kennedy is funny as hell.
Took President Biden to walk across the stage, and they kept it quiet till they couldn't. I'm sorry he was in that condition, but this transparency stuff cuts both ways. What's wrong with you talking to the President of the United States?
So Senator, I've got a wide lens. I'm interested in hearing points of view from a whole range of people. We have a narrow remit. I'm interested in what's happening in the world and the
But
Middle
I
East and
mean, is
elsewhere.
there anything wrong with it? Do you have to, when you do it, do you have to like go out and look for the last phone booth in Washington and put a bag over your head and
Kennedy
stand
is
there
funny
and
as
call
hell.
or return his calls? Anything wrong with that?
I certainly don't feel uncomfortable receiving a call from the chairman of this committee or the president of the United States.
Okay. You think Ben Bernanke ever talked to the president?
When I was a governor, I recall several conversations and
How about
frequent
Alan
meetings.
Greenspan?
When I was a young staffer in the White House, I remember being honored by,
You see,
coming
he
to
was
the
a
White
young
House and
staffer at
meeting
the
with the
White House.
president and the president's advisors quite frequently.
Okay. I think what I would give me concern, and I think it's the basis for my colleagues' concern, is that you just do whatever the president says, but you're not gonna do that, are you, or are you?
Senator, I'm gonna call it the best I see it. The president never asked me to do anything inappropriate, and if he did, I wouldn't do it. I'm gonna
Okay.
follow the law and do my best to follow the.
It's the same thing.
Okay.
The box, the zones, it's the same thing. I'm just looking at it from a support or resistance area. So I'm looking at that key area, support and resistance. That's what I'm looking at it. But sometimes, like if I'm rushing, I'll just do a box.
It worked, correct?
Well, that's a longer discussion.
Yeah, because it's in a range because I'm looking to the left of gold. So you see these areas right here. So if price break below there, we got a free run to the downside. Yeah.
Don't filibuster on me. So it worked, okay? Now we have inflation, okay? What cost it in 20 seconds?
In 20 seconds, inflation is caused when a one-time change in price is broadened
I
out.
know what inflation is.
And the
Mr. Chairman.
Federal
Tell me what
Reserve,
caused it.
monetary policy, sir.
Okay, well, I would say what is causing it is AI. The conflict with Iran. Duh. And probably the residual effect of the fact that some imports have become more expensive. Okay? And I think any fair-minded person would conclude that.
Yeah, it's common sense. It's like, why they're not telling us what is causing inflation? They don't want to tell us.
Rise in the cost of imports would be a one-shot deal. You know, you can teach that one round or flat. I don't know. I think it's probably had a residual effect. Okay, is it temporary? Is it permanent? The inflation.
It's not going to be permanent under my watch, Senator.
Okay, what are you going to do about it?
There we go.
We're going to do three things. One is for those people in markets that think the Fed really was comfortable with a higher level of inflation, we're doing our best to disabuse them.
Okay, you're going to talk about it. What's the second thing you're going to do?
We're going to take ownership of it. We're going to say we have the power to do something.
Okay, you're going to own it.
That's
What's the third thing you're going to do?
We're going to look at our tools in the changing economy, both balance sheet and interest rate, and see whether we need to adjust policy to take it head on.
You're going to look at your tools. That's the third thing. I'm not asking you what action the Fed's going to take. That would be improper, Mr. Chairman. I wouldn't do that. You wouldn't tell me anyway.
That's what we needed.
Give specifically, like you're talking to a 10th grader, okay? Not. What are your options? Leave it alone, right? Leave rates alone.
All right, guys, get ready.
This is one option.
That is an option, Senator.
Raise rates,
Another option.
cut rates.
A third option, a non-exclusive list of options, but
Well,
yet
and a lot of it depends on whether it's temporary or permanent. So how do you decide whether it's temporary or permanent? I got that in with 6 seconds left.
Well done.
you use 5 task forces to get to the big and hard questions instead of trying to paper it over with policies that have not been proven as successful.
Senator Cortez Masto.
Thank you, Mr.
You gotta
Chairman.
answer that.
Chairman Morse, good to see you again. Thank you for meeting with me. You've talked about the task forces. What's the timeline for getting reports from the task force?
He sounds hawkish to me.
I'm not a very patient person. People have said that.
So it depends if inflation is a one-off, but he sounds hawkish, like he's not going to cut interest rates. He's just going to leave rates where they are. So that to me is pretty hawkish. Do you feel like the Fed independence will be the key focus and Trump remain in time as president? I doubt it because it's like, what more I mean, you could change a lot within 4 years, but Trump just wants a booming stock market, a booming economy. And the way to do that is to cut interest rates and to keep easing. So it's like what they're doing with Japan. You know what I mean? So it's like, is that really bad? I guess they just more concerned about because the politicians can't have billions of dollars and turning rats gay. You know what I mean? Like there's just because they can't like launder the money. But I don't think it's a big deal. I think it's just all political because they just try to like ruin his presidency. But all Trump is trying to do is lower interest rates. He wants because when you lower interest rates, people spend more, people buy more. But yes, is there a possibility that Trump's portfolio gets better? Of course. But as we can see, they all making money. It ain't Trump, right? So if that is the key focus, I don't think it's going to make a huge difference. Like, but I like what he was saying. He's funny as hell. But yeah, like he's not going to answer, you know. So we got to wait for the task force. Yeah, gold is pushing lower. We got to wait for that task force, and I think the independence right now is the probably what's causing the sell off is that they know that oh shit, the Feds is not really as independent as what we thought, you know. I'm just like, damn, like if this is happening now with media and all that, like we all know about it. Imagine what was happening before 2008. Imagine the checks they was getting back then, you know. So it's like, damn, we was young, so it don't matter. But it's kind of crazy, like this type of shit is happening right now, you know. But yeah, like this, what's happening right now don't really matter. But he's like pow, bro. Like he's not giving an answer. Like he's just wording around. He's just wording his answers very correctly. He's not giving them an edge. Like he's answering what he just giving what he wants to give. It's very like the way he is kind of fucking like impressive. You know, like he's not folding. I thought he stuttered a little bit when he asked about is rate cuts an answer. And he stuttered a bit. Well, you know, like I kind of saw that part, which is like I don't think a cut is on the table. You know what I'm saying? So I feel like he is more hawkish, to my opinion, more of a hawkish pause speaker. You know, so I think that I think the cuts is probably going to be off the table. It's just only one inflation print. We need multiple inflation. Probably next month, if it's coming in lower, then we'll probably get a change in the tone. But I think we got to wait till that task force for us to even start making a decision. So, like, I will go back to focusing on just U.S. and Iran headlines and shit like that, and just trading the data, taking the scalp, and then calling it for the day, because he's not dovish. Like he's not. He can't say we're gonna battle inflation and that equals rate cuts. That doesn't mean that. When he's like, yeah, we're trying to fight inflation, that means the only way he can fight inflation is by by hiking interest rates or leaving rates higher by what it is, right? Or if he starts doing QT. So that's the only way. So I'm more hawkish with him from today right now. From all of this, he to me is very hawkish. Like, makes sense, guys. Like that's the only way. Yeah, right now we got a headline that came out. US struck the around the Strait of Hormuz. Yep. So what look at dollar started to push higher from that headline. Right? We see dollar is pushing up. That's helping gold push lower. So like this is yeah, like to me, yeah, he's just hawkish, guys.
We see that broad and affect the generalized price level. That's something we can do something about.
Yeah, it makes sense though, right? Because I think that was the giveaway today was just the fact that he like inflation is still high. You can put this in the fridge too, because inflation is still high, and he's talking about fighting inflation. He says that we're not going to be comfortable with higher inflation like the last administration, like with the last chair. So that to me is hawkish. So that means he's going to use tools to fight higher inflation. So it seems like they're trying to wait for the task force to figure out when they come to a conclusion on what's causing the inflation, then they're going to make the tools to try to fight it. So from Walsh perspective, I'm telling you guys, to me, he's not cutting interest rates. So we shouldn't be like, equities is going to be bullish regardless after this drop. But when it comes to the dollar, I don't think it's going to break below like 99 from monetary policy. So the war is probably going to lead to better opportunities like military attacks or not, right? Like right now we got the headline that came out where US struck around the Hormuz Strait, right? So that's helping gold push lower. We see that right now, dollars at that support and oil's at that support. So let's see if that pushes higher. That could set up for the gold sells to continue to play out. But yeah, like this one was kind of like, I think that's all I really got from all of this shit. Like all I got from this is that the 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 Federal Reserve is corrupt. They're getting bought out. Their decisions is being made by institutions, right? Like, and he's not cutting interest rates. So like that's what I really got from it, you know. I mean, is it possible that he sells his assets and then he just sold all his assets before he got there? Like, I mean, he didn't have to sell it. He's still rich as fuck. So what's the point of $100 million if he's already a multi-millionaire? You know what I'm saying? So it's different if he was like born and raised in the Bronx and then end up being a chair and then came to a huge bag of 100 million. To me, that's different. But I don't think it's like that. You know what I'm saying? Most likely he's already extremely successful. He's been in politics for over 30 years. I think we just need to hear more of him, and then probably the markets will shift away from the Fed independence. Like I think they would like not look at it so corruptly. We just need to like understand him more. I don't think he's a guy to fold and bend. Like he already, you could tell like he already comes from. He understands the politician game. He's been around these people for all this time. He knows how to answer questions, right? He knows how not to give anything. I don't think we have to worry about the independence part. I think this is just a good Democrat game, just to make Trump look bad. But like I said, it's like he didn't say no, which was kind of interesting. But he said no to the person after. Like nobody gave me 100. He was like nobody gave me money like that. But the reason why he can't answer that because it's like whoa. So people do have the access to give you these type of offers. Like you know what I'm saying? So it's kind of crazy that it's a possibility. You know, like if somebody asks Trump, "Hey, did a person at BlackRock offered you $1 billion so that they could get this contract?" And he'd be like, no, nobody offered me that. But then the question is, so somebody still has the access to come to you and even attempt to offer you that though, right? So it opens more questions. So that's just how the game is. But yeah, like I like anybody entered, like yeah, if y'all entered anything, it's cool. Like hopefully you guys took the CPI hit, took your scalps, called it for the day. Now it's just like we're just watching a movie. If you enter the gold sells, like hopefully this could like it will probably push a little lower. But I think the end of the day, we're just gonna see just sideways price action after this. Yeah, I think Roy's in sells too. I think he got it at the highs. So I think Roy got in. But yeah, hopefully after this, we could just probably see consolidation. Like I still like the upside. I still think the markets is going to follow the dovish perspective later on. But I don't think Walsh delivered on that to us. But I know the data supports it, but I don't think Walsh gave us that delivery. But yeah, yeah, because the sales is playing out. You could easily got like a good 30, 40 pip run, maybe even more. If we could push probably like around 36, 30, 40, 35 could be a good take profit. Like it's a good run. You know, you could get a really good scalp in that. But it's like what I said earlier. It's like the data gave a direction, and then now the news headline with the geopolitical tensions gave a direction. So you guys could see it. But when it came to equities, that was happening way before. You know what I'm saying? So equities is already pushing lower before Walsh started speaking. So just to give you guys the context, it wasn't the headlines. It was already reacting before the war, before Walsh started speaking. So gold reacted immediately from that headline. So I still think it's a good scalp. But to me, like the markets could look at it from the Fed independence is now being questioned, and he is still not looking to cut interest rates. So they're going to be expecting a pause still, a hold. And as I can see right now, the possibility for the next one is next year at July 28th of 2027. So there is a hold, there is no cut, and there's a 34% chance next year. So that is hawkish. Makes sense, guys. So it's like that is that's what's happening right now. So they're not even expecting a hike. They're just expecting a hold. So from right now, from the information that we got, there's only a possibility for a cut, which is 34% chance July of next year. So for the remainder of this year, it's going to be a hold. Only one possibility of a cut. So to me, like, I still like the idea of the hawkish language, but if we could get stronger dollar, that would probably be the better play right now. Unless, like, obviously data moving forward. I don't think we have any more data. Like, I know tomorrow we have like jobless claims. Don't really matter. We're gonna trade UK GDP for London. But yeah, we got Michigan sentiment on Friday. We got jobless claims in Philly Fed, but that's not going to really, yeah, data wise, like this is not anything major. So it's going to be like focusing on what happens today with the US and Iran war. But it's just 50-50 right now. It's very, yeah, headline focus is the reaction. But I would say it takes scalps because like the data inflation, we had lower inflation this week, so they can't ignore that. So the problem is that with the lower inflation, it's not giving us rate cut perspectives. So you see what I'm saying? The lower inflation, all it's doing is showing us that the Feds is not hiking rates, but it's not focusing on rate cuts. So that's the reason why, we got this reaction. I'll show you guys here. So you can see here, like this is the current rate curve, right? So it was pushing the blue was a week ago, so it was pushing higher, anticipating hikes. But now you see the curve started to drop. So now we're seeing it that is pushing lower, right? So the implied points, we see that's lower. So the real time meeting of like this was the inflation data, it dropped, right? So this was inflation. So now we're just trending sideways. It's not dropping anymore, but you can see that what happened is the possibility of a hike. It's no real possibility. It's leaning more towards a hold. So we're at the high 70%. So the only chance that we have for a cut is next year. So this is all that it is. It's not the inflation is not signaling us that the cuts is coming into the markets. It's signaling that they're going to hold rates. So lower data is just not supporting a rate cut. That's the problem. So that's why we're not seeing that dovish reaction. So the hike is still on the table, but it's only at 20%. So it's not going to change anything. So that means July 29th, they're just going to pause rates. So this might go up to 80% maybe. If it's 50-50, then that's when we worry. If it's a 60% chance of a hold, that's when we worry about a hike or a cut or a pause, right? But high 70s is still a chance that we're just going to hold rates. So as of right now, it's like a data dependent hawkish pause Fed. So that's why like the moves, even with the lower inflation, it's not triggering anything massive. Just so that you guys could like get a better picture. He's not saying anything, like he's not even telling us what's causing the higher inflation. Like that's what Kennedy was like, this is what's causing it. But why doesn't he want to say it, right? Because obviously it would give us it would make the markets lead the Fed, right? So if he says that, well, like if he says an example, like the job data is like wages is what's causing higher inflation. So once we get a lower wage print, guess what the markets is doing? They're going to be buying equities to all-time highs, right? Selling the dollar massively because he gave us forward guidance, right? So that's why he's being very cautious about giving us anything, because the markets reacts 7 months in advance before the next rate decision. So that's why he's doing that. But it's like, this is for the public too. You know what I mean? So the public, as public, we don't even know why is inflation numbers high. They don't want to tell us, but they're like, oh, the war, the war, the war. But how is the war causing the prices to rise? Because like, if I'm paying for something that has nothing to do that like, how do we know? You know what I'm saying? So that's why I don't like what's happening here, is because the public don't know shit. So they're hiding when you're paying for high priced goods and you don't even know why. So that's where the problem is. You know what I'm saying? It's like he don't want to tell us that. And then they just say, well, the war, they just blame Trump. Like, but it's like, how? You know what I mean? Like, how is it happening? How come oil now dropped lower, but then gas prices is still above $4 a barrel, $4 a gallon, right? So that's the problem that we're facing. So that's where I like the speaker, like Warren, to come out and hammer them with that shit. You know, that's where it makes sense, because now it just doesn't make sense. Because if we're trading equities is already, even though we got this drop, like equities is already at all-time highs. You know, like we're like equities is already there. Oil around 70 to $80 a barrel, right? So then it's like, okay, so if the markets, the people that they're trading, they're not concerned about higher inflation. So why are we still paying for higher price goods? Why is homes still at all-time highs? So that's where the questions arise. You see what I'm saying? Because if we are still battling inflation, then equities should be hitting all-time lows. Dollar should be ripping to the upside. Gold should be ripping to the downside, right? Because that means inflation is still a massive problem and the Fed should be hiking interest rates. But the fact that we're not seeing that, it's like, why are the prices of things hot so damn high? So you get what I'm trying to say? Like the markets, and it's not correlating to the prices of like just the products. It's not correlating to houses and oil, like when you filling up your car, when you're buying these things, like the markets is not following it. So that's where I feel like he's trying to correct that part, because but that's the problem with stocks. And this is why, what's the guy's name? The one that the 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 one that traded 2008. He's predicting the sales in the stock market. What's his name again? I just went brain dead. Yeah, Michael Berry. Yeah, exactly. So that's why Michael Berry is predicting the sells, because shit is not aligning. That's why he's saying that these individual stocks is just, they're not trading fundamentals and they're just being overpriced. Like when it comes to AI, it's like people are just buying the stock market every single time they just say they're adding more money into an AI company. Oh, they're buying more data centers. It's like, okay, but there's no profits in return. So this is just all speculation and hype, right? So this is why NASDAQ is just inflating. That's why they're like, a lot of people, they are saying there's a bubble to the upside in the stock market. And it happens all the time. The problem with the bubble this year is probably not going to be a recession, but it's going to be from, okay, we're not getting profits. So money is just going down the drain, you know? So when are they going to see profits? So like, that's where those type of conversations make sense, where it's like, this is just all hype and speculation. There's no actual changes, you know, because how do we know? They're making a new iPhone and all they're doing is making it thinner. Like it's not like you could talk to people on holograms and shit. So technology is not drastically changing for a consumer to actually go, oh shit, like life is different now. Like the only difference that we had with technology is Teslas and those EVs. That's the most different thing that we got. But every other company is like, they're not making anything drastically different if you guys look at it. It's just that our habits as humans are the same. New iPhone come out, got to get the newest shit. Don't matter what it is. All they do is adding another phone and just making it thinner. Like it's the same phone, but a different color, right? So human habits are the same. It's not the technology is not getting better. Like you've been using the phone the same way that you've been using it when it first came out. You use the phone the same way. So like the difference is like chat gdt is like a new thing too, but it ain't nothing new different than Google. Like people used to Google treat chat gdt like Google. So it's like when you think about it from that perspective, it's like what are they really doing that's new, right? It's like the chat gdt shit, you could add it to like your workspaces and stuff like that, but it's just a hyper active type of Google. Like people use it the same way. Like, how do I make this recipe? Chat GDT, and we ask how you make this recipe. You do the same thing with Google. So all it does is just grab all the information on the internet and then it just give you the summary. Like that's all it's doing. But before you just had to look for the information yourself and go through each website yourself. Chat GDT just does all the longer term thing quicker for you. So I get it where it comes to like it's going to be inflationary. How's AI going to be inflationary? I do think it's going to impact people's jobs. It already is. But will it get to a worse perspective where nobody can have a job anymore because AI is taking over? So that's going to be a issue for the future, hopefully from 5-10 years from now. But I expect like what I'm seeing too is like it's a pattern. So when the downside happens, right, for the stock markets, you're going to be able to capitalize on it because you guys just wasn't aware during 2008. But soon as like what we're paying attention to, it's all there, right? The problem is that we're just not getting those signals yet from earnings. We're not getting the signals yet, but eventually it's going to come. And when it comes, you're going to be able to catch it, riding it all the way down, and then start buying everything back from the lows again. But he says that we're not doing bailouts. So if he's not doing bailouts, if he keeps his word, because he could say this now and say, well, I'm not doing bailouts. But if a bailout is needed, he might have to do a bailout anyway. So a bailout is just quantitative easing. But if he's the type to not do a bailout, if a recession happens, then we're going to have the worst recession that we have ever had in human history because we're not going to get a bailout. So that's going to be devastating, right? And I don't think he wants to be the Fed chair to have that behind his belt, right? So obviously he just like doing wordplay just to tell people what they want to hear. No, we're not going to bail them out. But how you're not going to do that? Like people's homes, people's cars is not theirs, is the banks. So if you don't bail them out, the banks can't keep up with the products, right? Then people's going to massively lose homes. People's going to lose their like pretty much everything that you're holding in liquidity is all going to be for nothing. So there has to be bailouts. Y'all get what I'm saying? So it's like, then what is the purpose? If there's no bailout and if there is a recession and banks fail, if they find a way to just have you still be in your house, then what are you paying for it for? So you see that the illusion of society has to keep up. Like they can't change the illusion. Like, so that you get what I'm saying, right? You know, because if he does not do a bailout and your home, your rates and what you're paying for it is from Bank of America. And if Bank of America fails, they own your house. You can't make those payments no more. If Bank of America says, fuck it, they go down out of business, either another bank has to buy them out where they buy your assets. But if they don't do that, what is the point of you making payments? You see what I'm saying? So then that illusion that we've been living for our whole lives goes away. So now people is like, what the fuck are we paying for shit for? So that's why the bailout has to happen, just to keep the illusion to help people pay for shit till they die. You know what I mean? Like, because obviously, if you don't own the home is owned by the bank. You don't own the car is owned by the bank. They have to keep that illusion. So all of this stuff that's happening now is just theater. Like, even though like they questioning him, it's not like he could go to jail. He's not a politician. You know, Fed members are not governmental people. You know, so we don't even know what to characterize them, to tell you the truth. I know he's talking about the stock market. Not to scare you guys, but I hope y'all understand.
effect of AI on productivity and jobs. The three individuals you chose for the task force are tech executives who have directly worked for or with AI labs, all three of them. Yes or no, will the Fed include anyone on this task force with an alternative viewpoint on AI?
All right, so we see that
For example,
no plans for
anyone who
negotiations
represents
at the moment.
lives may be offended.
That's more market fear.
Who has knowledge.
Well, Senator, it's a fair question. As I mentioned to your colleague a few moments ago, what I'd say is one of the people on those task forces is an academic. Now, I don't want to suggest that the academic is representing some.
You don't want to suggest that the academic is being academic.
I don't want to suggest that, but this isn't a faculty lounge discussion. What I do want to suggest is that academics' work has spent a lot of time talking about prior technology shocks and the displacement that it has on labor. The assurance I can give you is that these three people on that task force, like the other task forces, they're not the deciders. You're talking to one of the deciders. Right. The 19 of us around the FOMC with a breadth of backgrounds and interests, we're going to decide what we think of their conclusion.
Yeah, but as a decision maker, I always want clarity.
This is Paytime Solutions. Hi, continue to hold.
At Extensus HR, all your HR needs live in one place. Real people who pick up the phone on the first ring. Extensus HR. We put the human back in human resources.
Senator, your time. I'm wrapping up, sir. And I'm worried that this viewpoint isn't represented at the Fed, and I would look to broaden.
Senator Lummis, some time is yours.
Thank you so much.
Thank you, Mr. Chairman, and welcome, Mr. Chairman. I have a couple questions about bank supervision before we go to monetary policy. The first one is Vice Chair Bowman has ordered an independent review of the supervision of Silicon Bank and Signature Banks. And I think that's a really good thing. I applaud her and support her efforts there. So have you instructed your staff, including the attorneys in the legal division, to cooperate with this independent review?
Yeah, so thank you, Senator Lummis. This call for a review of what happened around Silicon Valley Bank preceded my time at the Fed.
Yes, it did.
But I'm certainly aware of the ongoing investigation. And my general rule is that we should be cooperative to investigations, and we should try to get to the bottom of the facts of on regulatory and supervisory issues.
You know, there are rumors that there may have been destruction of records by some of the staff at the Division of Bank Supervision. And of course, that's a crime. So if records relating to the supervision of these banks were intentionally deleted by staff before you were at the Fed, before you ever became chairman, will you order your staff to assist in recovery of these records and cooperate with law enforcement?
Yeah, so I made a bold statement to one of your colleagues before that I was opposed to scams. I can make a bold statement I'm opposed to criminal activity. I have no reason to believe there's any criminal activity here. But I think we want to get to the bottom of an investigation. If there's an ongoing investigation and an investigation.
I don't see the headline about the Jones Act waivers.
They shouldn't have access.
Thank you. I want to turn to a proposed rule that is being considered and ask for your thoughts on the proposed rule. And it has to do with the Federal Reserve Board's payment accounts. Skinny master accounts is kind of a term that's used. You know, my staff has told me that.
Yeah, all the Jones Act is, it's about vessels like
payments to an insurance company.
yeah, like vessels, like if they're traveling from like the US, they have to use like US vessels, you know, that if they're moving through the US. That's just really it. That's all that is.
It seems to me that the Federal Reserve is really on to something by trying to.
So it depends on the situation to see how that can have an impact. But all it is just that part. Like, do they have to, like, what's really going on with tanker capacity or the fuel, stuff like that. But I don't think it's nothing that's tradable.
That restricts access to the payment system to the consumer facing banks. So
I'm sorry, I'm just very interested in this, like, because it's just crazy to see how it is, like, because it's just fucked up, like how this turns to like how they just trying to keep us to follow this illusion. Like people don't really understand that this is the government questioning the people that creates the money that we work hard for, right? And the people that is controlling the dollars that we need to live, right, and pretty much buy stuff, don't want to give us an answer. So it's like, bruh, like it's crazy. He don't want to tell us what's causing higher inflation. He don't want to tell us what he's going to do to lower inflation. He's not going to tell us what's causing it to rise. So it's like, damn, like this is the people that is controlling the money. So he's like, well, my job is just to make life for people easier as possible. But he's not telling us how, so most people don't understand this. Like as what we listening to, most people don't understand it or comprehend what's actually going on. But when they look at bailouts, they're like, oh, you're just bailing out these billionaires and these corporations. It's like, bro, like the apartment you live in is because of them. The house you live in was built and you pay it because of them. The car that you drive is because of them. So if they don't get protected, you're not going to build your own car. You're not going to build your own house. So that's why it's a huge clusterfuck, because they have to get protected even in order for us to survive. It don't matter if you live in the projects, who built the projects, right? Who maintains it? So these corporations need the bailouts. And that's what I was saying. Like the illusion has to still be there, because if the banks fail, then how are you going to get your money? They're not going to give you your money. You can't even go to the ATM to take your money out. Then how are you going to get your food? How are you going to get your products? So you see, like, it's a lot bigger than just, oh, these billionaires is just getting saved. Like they have to keep the illusion alive, because once people realize all of this shit, like, wait, so if a bank fails, then what? Because say that I got my loan from Chase, and if Chase fails, well, JP Morgan, if they fail, now who do I pay my money to in order to stay in my apartment, right? But JP Morgan can easily just say, well, you got to get out, right? I got to kick you out. They could easily do that. But if they fail, if another bank doesn't buy out all their collateral, then who does the collateral go to? So, right? So who do you pay? So when you realize this, because everybody is a recession happening and all of this shit is happening, then people is going to start realizing, then what the fuck am I working for? Then why do I work just to pay for a mortgage, pay for a car note, and pay for food? Why are we doing this? Right? So that's when the illusion breaks. And then when the illusion breaks, this is where either society could go either way. They just start tearing up shit, robbing and killing, or we'll see people to say, fuck all of this shit, and we're just going to live free and happy. Right? But we don't operate that way as society, because if I ask you right now, if you had $1 billion, would you work your job? If you're a construction worker, if you had $100 million in your bank account, would you be building that house? 99.5% of you will say no. So nothing will be created anymore. Makes sense, guys? So like if you had money, you ain't gonna be working, you ain't gonna be building shit, you ain't gonna be creating, you ain't gonna be fixing no cars, you're not gonna be you're not gonna be growing food, you're not gonna do any of that stuff, right? So that's why they created working for people, right? Because if we don't work, then nothing gets built, nothing gets created, then there's really no purpose. So this is why they have to create that illusion for us as society, so that we can continue to work and create. So that's why, like, when he says, "Oh, I'm not going to bail nobody out," it's bullshit, because then that's a way bigger problem than the recession itself. So that's where like the shit hits the fan, when you start thinking more deeply about the shit. Like, fuck, this is a matrix. This is an illusion that we're living every single day, because like yo, if these billionaires could just give them a check and just say like, hey, just let me know when you're about to cut or hike interest rates so I can make decisions for my fund. Like, that's crazy as fuck. but the markets is already reacting beforehand. So it's like we follow the data just as much as they do. So it's nothing really different compared to what hedge funds is doing compared to what we're doing, right? They're following the data, but the problem is that they have enough capital to actually influence the markets. We don't. So we have to wait until after the move, then we react, right? So that's the whole purpose. So we're in the same track as them. The problem is that, you know, we don't have the capital, but we doing the same shit. So that's why like trading is good, because like if we ever do face a recession, right? Most people, these 60-year-olds, 80-year-olds, they're waiting for their 401k, right? Their retirement check. They living their money off of what the markets make. So when people was bad mouthing the markets, that's bad for the people that's looking for a retirement, right? So you can't say, well, okay, well, the stock market is rising and that's bad because billionaires is only profiting. Trump is only profiting. That's not true. 80, when you retire, you're profiting too. Your 401k is profiting too. So the consequences of that is that, yes, these institutions are, you make $1 million, they're making 100 million. That's the problem. Right? But you can't want them to fail, because if they fail, then we all fail. Then you ask, okay, if the stock market crashes, then what is the point of working? Like, because your goal is to work to retire and then make money and then just live off your check for until you die. So if there's no, they're trying to push that away. That's why they're doing 401ks, because a pension is more important than a 401k. But now every job offers a 401k or a Roth IRA, right? So they're trying to change that illusion of the working class, you know? So when you start to pick all of this shit up, it's scary. And it's scary to think this way, because then you're like, what the fuck is the point of all of this shit, right? What's the point of life? That's why the Bible is important. But you will realize like all of this shit is just vanity, you know, because like right there when they're literally talking to a person that creates the money. Like he creates our wealth. He has the power to put us through a depression, or he has the power to make the economy go extremely well. And there's nothing that these politicians could fucking do about it. The only person that could make it happen is Trump. So if Trump wants to lower interest rates, that means we get more money. We could go on more vacations. We could have more loans. We could start up our business. We could buy more cars. So if he wants that for us, why is people losing their shit, right? But the problem is, oh, well, he makes more money. They all make money. So y'all see what I'm saying? So like, that's why it's a contradiction. It's like, you like the rules, but you just don't like the person setting the rules. So it's better if we have a president or a person or a Congress that wants the benefit for the people, right? Because if they want to benefit the people, they would want them to say like, okay, all right, guys, we have higher inflation. You got to prepare for this. So they're going to hike interest rates. You need to save your fucking money. You got to stop spending, because the faster people listen and don't spend, the quicker the recession could be, and then the feds could start lowering interest rates. But they can't do that, because then they realize that, oh shit, we're the ones that control our destiny. We're the ones that control our inflation, right? They don't want the people to realize that. They want us to think that they control it. But the reality is that we control it. Every single time you go to the store and you buy a product, you're contributing to higher inflation, especially if it's high. If you used to pay $2 before for a drink, now you're paying $5 and you're still paying for it. You're the fucking problem. So it's not just you, but it's millions of people contributing to that. So that's why inflation is rising. And then if you're a store owner, you're not going to go back to $2 when you realize that same customer paid $5 for it. The problem is that they can't do anything to the owner to say, hey, you have to lower your prices. They can't do that. That's the beauty of America, right? That you control the prices that you want to sell it for. If you are a barber, you used to sell haircuts for $20. Now you charging $60. And that same customer is paying $60. You're not going to go back to 20. And then now your rent goes up. Now you have no choice. Now you definitely can't do it, because now it's like my rent is up, so I definitely can't do it, right? So that's the problem. So how are they going to fix that? How are they going to lower rate? How are they going to lower mortgages? How are they going to lower rent? How are they going to lower monthly payments to these office buildings so that the person with the business can lower prices? So I don't think there's a solution for that, right? Like, because like when housing, because like corporations own all the homes now, right? Most of the family homes, so they set the price because they could sit on that empty home for the next 30 years. So if you own a home and you trying to sell it, then the one next to you is owned by this bank and it's being sold for 250,000. You're gonna go, shit, I could sell mine, I could increase it and sell it for 220, right? So that's the problem, and that's what we're facing in America. So it's like, how are they going to fix that? If like, I don't know, but a recession, we had COVID, but the problem with COVID, it didn't fix it because they did quantitative easing. So that's why prices right now is so high, was because of the QE. So they can't do they have to cause a recession, and we got to sit in that shit for like 5 to 6 years. So that's like the only way I could see it, is that the United States have to sit in a bad recession. And I don't think that they want to do that. So it's scary to think about. But I hope that it exposes you guys to like really think about how fucked up shit is. Like, we're just pawns in a game to them, because they're the ones controlling the dial, right? So our job is just to, when they control the dial, how my life could be the same way regardless, right, of what happens. How could I make money regardless? If you're working a 9 to 5 job, your struggles is automatic. It's nothing you can fucking do about it. So if you're working a 9 to 5 job, the moment a recession happens, you either going to lose your fucking job, or you still can't afford to pay for your living, your daily necessities. That is artificial. So that's why trading is so important, guys, because it's like, this is the only way that you could actually control your own finances. You see what I'm saying? No matter what happens, a recession happens, sell equities, make money. A booming market, buy equities, make money. A war happens, buy gold, make money. A war stops, sell gold, make money, right? But if you're working a job, a recession happens, you might lose your fucking job, and then you can't get another one. You see what I'm saying? So it's like, it's artificial for you to struggle if the economy does bad. So why is people voting for the economy to do bad? So you see what I'm saying? So like, I hope it helps you guys understand. It's not Democrat and Republican. They all fucking us. Like, it's all crazy shit. It's like, who you like, Bloods or Crips? They all killing people. You know what I mean? It's like, it's the same thing. So if you guys have to control your debt, you gotta like prep for it. Like, that's why it's like, once you're aware, save your fucking money. Like, get out of debt as quick as possible. Pay off your home, pay off your car, because like right now it's not yours. Yeah, you wrote your name, but you're just borrowing it, bro, until like it's only yours once you pay it off. But it's the banks. But what happens if that bank fail, right? Then obviously another bank will buy them out. But what if they don't? Then they could just take all your assets, and they just going to sell your assets to somebody else. They could take it from you. You know what I'm saying? It's not yours. And there's nothing you could do about it. Just think about 2008. The people that couldn't pay for their homes, they had marshals throw their ass out. The police officers throwing them out, while the police officers can't even pay their own bills. So it's just that's how fucked up it is, So that's what I think about when I look at all of this shit. It's like, damn, like, people is really falling for this they're falling for this matrix, where it's just like, we get a recession, there's not a motherfucking thing you can do about it. Like, your life is gonna get hard. It don't matter. That job might lay you off. And then you can't even get a McDonald's job because people's getting fired off of that shit. And then they have an AI working at McDonald's. So you can't even like be a cashier because they got a bot doing it. So that's what's so scary, is that if another recession happens, what could you do? You can't even get a McDonald's job, right? So you have no choice but to do like DoorDash or Uber. But how are you going to do that if people ain't going to be able to buy those expensive foods from Uber no more? Because everybody feels the effect. You see what I'm saying? So I hope that this helps you guys wake up and like think about it from that perspective. That's why watching these things is important, because it shows you how they're fucking us. So we just have to learn how to get unfucked. It's like, okay, like, this is how you've been fucking me my whole life. So now I could adapt to it, because everybody else is just an autopilot. So they don't know what's really going on. They're just an autopilot. So when you learn to like, okay, now I could see how we could Yeah, with no Vaseline. Yeah, like it's crazy. You know what I'm saying? But a lot of us was young, so you wasn't there. Like you didn't know the struggles back then. You know what I mean? So nobody experienced it yet. You know, like nobody's experienced it yet. So that's why it's not scary. But just think about it like because it could happen. And then when it happens, you want to be prepared. Right. So like if you start making the habits now, like, all right, I got $50,000 saved in my bank account. So now you lose your job, you ain't going to be as stressed compared to somebody that loses their job. You've been living check to check your whole life, right? So it's just about building those habits, like work on those spending habits, because guess what? That recession is going to come. And that time, oh, I want to get a home. Everybody's going to be selling their home, and you be the one that could buy that home for 10 times cheaper. So it's going to happen again, but we just don't know when, right? But if it does, you want to be in a position where I could still have a good life, right? So that's the whole purpose. You know, like we can't predict. We ain't going to be able to predict it. We're just going to have to adapt to it. And that's what we do in the markets, but also in life. But just think about how the government is dealing with debt is the same way how you deal with debt in your personal life. They just deal with the debt in a bigger scale. So they're very reckless. So you just can't be reckless when it comes to your debt. Like that's just really what it comes down to. So like, yeah, guys, I hope it helps. You know, it's scary. Like I said, like not a lot of people think this way, but you have to be aware so that you can start making those changes. And it's not like live your life in scarcity. You know what I'm saying? Like when you've been through 2020, you saw what happened, right? And you still survived it. So I don't think nothing is going to be any worse than that. But it's going to be worse for the people that is looking to retire, and now they can't retire. They got to wait another 3, 4, 5 years to retire because their pension and their 401k is going to be at all time lows, right? So that's who's going to really struggle is the older people, because now you got to wait another 5 years to the stock market to rebound. You know, you see what I'm saying? So that's what you tell somebody that's older. It's like, shit, you better retire before that recession happened, because when you about to retire, I'm about to retire in 3 months. And then 2 months from now, we get one of the biggest drops in US history. Now you can't retire because you're going to retire to nothing. You see, no pension, no 401k, nothing. You know what I'm saying? Because like that's where your money is going. So that's who really struggles, you know? So they will deal with the consequences of that. And that's if they could still keep their job, right? So the older people is who deals with that actual fear. So your job now is like, let me prepare myself for when by the time I'm 60 or 70. Yeah, it's like you're waiting for the TP to hit, and then and then that's your up. Nope. Now you gotta wait another few 5 or 6 hours and shit. But for them, they gotta wait like 5 years. It's crazy. Eddie, as of right now, like I think risk off is the direction. Yeah, Apple is doing good. Overall, if this support could hold, I wouldn't mind taking the buys if it breaks back above like 29.500. That could probably be a good buy. But as of right now, it's just a complete risk off market globally, you know. So it's not, yeah, like everything is down. It's like gold, dollar, equities is down. That's why I'm just rambling. Yeah, it's like everything is just bearish. But if we see that the conflict is easing off, like they're back to peace talks, then yeah, if we could break back above 29.5, I think that could be a good buy for the day for NASDAQ, especially if Apple is doing good. Tech is still doing well. But military attacks is still happening between the US and Iran. So we just have to be aware of that. And I think at 2 o'clock we should get something regarding Iran. But like let's see if if there's a meeting that's gonna happen. But as of now, I wouldn't try to rush that by real quick. The mentorship we get from this is amazing. I'm learning so much from every aspect. Yeah, I'm glad, man. I'm glad. Yeah, like because if I didn't care, I would just like, all right, done for the day. I trade ideas and be done for the day. But the goal is for you guys to be good at life, you know, because it's much more than making money. You know, like it's way more, it's much more than that. And then your goal is just to like, oh, let me still help and like tell this shit to other people. It's like, you know, like we work so hard for things, and the things is not even ours. Which is crazy, right? Like, so it's like the bank owns these things, and then we have a massive, it's not you guys, but majority of the public, they want these institutions to fail. Like they really do. like, and you're like, whoa, if they fail, then shit, I can't drive my Benz no more. I can't live in this fucking big ass house because they're gonna take it from me. So it's like I get it. Like if some people is very poor, all right, you live in a project, so you make an EBT, but you're not gonna even have food stamps because like who pays for it, right? So it's like if they fail, we all fail. That's just how they created it. This is why they say they're too big to fail, is because they created it that way. Like they created it where if we fail, the whole world fails. So that's why they could pay these politicians. That's why these Congress and the government has to follow these institutions, because money is what controls everything. Like I think it's common sense, but where is your money right now? It's not under a mattress, it's in a bank. You got a bank card. So where their money? Their money is also in a bank. So it's like you can't tell the person that controls the money, fuck you. You can't do that, right? Because then how are you going to get your money? Yeah, that's why I don't like to buy from support. It was like anything above 29,500, but it is a complete risk off market. Yeah, like that shit has opened my eyes too. That's why I just want to share it with you guys, because it's like, damn, like how you gonna say no bailouts? So that means everybody, like you, the person that means you was elected to fucking ruin the United States of America. Like that's what that this person, Kevin Walsh, is gonna be in the history books of the worst recession in modern history. Like, is that gonna happen? I mean, he seems like he don't give a fuck. So that means like, we're gonna hike rates, we're gonna keep rates higher for longer. So it's like, damn, you trying to artificial a recession. That's what it seems like he's trying to do. It's like, yeah, I'm trying, like he's literally trying to cause a reset, but without quantitative easing. So imagine COVID without QE. We would have probably still till this day been struggling. Why? Because QE is what helps businesses allow they open up jobs, they could expand, right? So if there wasn't no more stimulus going into the economy, people still won't be working till today. You'll probably just be trying to get better, but inflation will be eventually they would do QE. But if they would have never did quantitative easing, the money printer, like COVID would have ruined people's lives. You know what I'm saying? So that's why the stimulus is so important, because people was able to go back to work so quickly. If it wasn't for QE, nobody would have been able to go back to work because those jobs would have failed. So I hope you guys understand that. So if he doesn't use QE, the only way they do it is when there's a massive problem. But it seems like he's trying to, like, they want the problem to occur and then they want to fix the problem afterwards, which has to happen. It's not like, oh, he's the worst person ever. Like, guys, it has to happen. So it's like, what other way we could get lower, these houses could come in lower? What other way products and these goods could drop? What other way? There's no other way, right? Other than people have to fucking struggle. And then they have to struggle for a very long time. People have to lose their jobs, right? People have to go in debt. People is going to be committing suicide. You like it has to happen in order for us to get a reset. So who's going to be the one to blame for it, right? So they're obviously going to blame Trump, or they're going to blame this new Fed chair. So we don't know if it's going to happen in the next 3 years, but I think we're getting close to it. So if they don't, and then say Trump's administration is over, then we get another Democrat president, then guess what? The money printer goes back on, more useless spending, right? Reckless spending, everything just restarts again. And then all it does is just pushes the problem later on in the future. But hopefully by the time we die, we don't have to deal with it, but our grandkids might have to deal with it, or our great grandkids might have to deal with it. So that's all that they're doing, is just pushing the problem further out. So what they're trying to do now is like, let's get the problem now so that we can fix it for the future. What the Democrats want to do is like push the problem back, because we're going to be dead by the time this shit happens anyway, but let's push it back. So that's how you have to think about it. So if he's trying to cause the problem now, it's just so that we could have a better future. If they're trying to make the present better, then it's like the problem is going to occur in the future. That makes sense, guys? So like, that's what's really going on. So that's the shit that we have to deal with. And yeah, like as of now, like the war tensions is still going on. But yeah, we're gonna unpack a lot of shit, bro. We're gonna unpack a lot when it comes to this. But yeah, it's scary as shit to see how things are going, and like we gotta put ourselves in a position to be good regardless. You know what I mean? Like right now, imagine how many people is like losing their shit because of this drop, right? Like the SpaceX IPO, like that, like just catch it at a low, So be able to, if it hits around like 120 or 100, then you better buy that shit because then eventually it's gonna recover. But yeah, like it's just a lot of shit that we got to unpack. But my bad for rambling, guys. Yeah, I'm glad that y'all here, because it would change your life a lot where you just damn like okay, this is what I've been doing this whole time. And yeah, like if I deal with a recession, it's like look at the airport situation. Like the government does a government shutdown so that people working at airports can't get paid. All because of policies that they could vote on that they don't want to vote on. Like, so they don't give a fuck about you. They don't give a fuck about us, right? They're using it for a political standpoint. And people was working at airports wasn't getting paid for like 2 months, bro. They had to like, how were they able to pay their bills? Right. So it's just like if they could do that from a government standpoint, imagine what they're doing from a Fed standpoint. And not just the United States. Imagine what they're doing in other countries. So imagine the corruption and all of that shit in other countries that like in Europe, Australia, Africa, New Zealand. You know what I'm saying? So imagine the corruption and those type of points where they don't have a media like us. They don't have a governor Warren the hammer the Fed chair and not have to worry about consequences because they try that shit, they get dead, they get killed, right? They get assassinated and shit. Yeah, like in Africa, imagine, so imagine in those countries, they can't do that because they get killed. What Warren did, she would get her head chopped off, and then they would say she fell down the stairs, right? So it's like, damn. So imagine what happens in other countries. So like obviously for us as traders, it just makes it easier because we could sense the corruption and we just have to see like, okay, well, I can see that they're trying to profit. You just buy their index, right? Are they cutting interest rates? I know exactly what to do. So as a trader, it's easy, but for a person living an everyday life, it's not easy because your life is artificial to struggle if they want to cause a recession. Your life would get better if they want America to do better. So that's why like you have to like get out of that 9 to 5 shit because you have no choice. Like the life that you want is usually not given to you by a 9 to 5 job, right? You're chosen to be stable and follow rules and just live averagely and think average and just be on autopilot, right? But once you get out of that, that's where the oh shit, like life, the things that you want appears. But all right, guys, this is one of you've been asking for segment, all directed directly to your trading view chart. No more switching tabs while prices moving. The gap between you and the institution just got smaller. Where you read that? Oh yeah. So yeah, all they're doing is oh yeah, market. I think they're adding it to trading view. That's all. Yeah. Yeah, so they're adding it to TradingView. So just like because I have Reuters, so all they're doing is yeah, they're just adding an extension. So when the headline, you're just going to be able to see the headlines on your computer. That's about it. Like it's no different. Like because it's good though for people but most people don't pay attention to the shit anyway. But you get a headline, it pops up, you see right here, bombing. Like you're just gonna have the same headlines being repeated. Like that's all it is. It's just that it's just in trading view. So hopefully it doesn't clutter your screen, but it's a good extension. It's a good thing. So you're just gonna get the headlines in your trading view. That's all that it is. So it's really good though. No, I don't think it's a video, but it just makes sense. But yeah, like yeah, so people could actually get it. but you're going to get the same headlines that you get in the Discord. You're going to get the same headlines that you get in Reuters. It's the same headlines. But yeah, like it's a good addition. But like I said, 90% of people don't focus on the shit anyway. Most people just focus on fibs and the whatever the shit that's on YouTube. They just trade that way. So most people ain't trading like with news headlines anyway. Like 90% of the people ain't watching this guy speak. Like, yeah, like they're not watching it, you know, like they don't care for it. So they're not paying attention to inflation data. They're not really paying attention to it. Like like what I have to deal with is that I took the buys on gold and then now gold is pushing lower and then somebody's going to be like, "Oh, inflation data caused gold to drop. Why is that?" Like you know, because they're not focusing on the day to day. Like, oh, inflation came out higher, lower. Nasdaq hit all-time lows. Why is that? Like, oh, dude, data is bullshit. But like we did the data, then we did Kevin Walsh. We looked at the news headlines. So you can see it's a structure to it. It's not like, okay, well, it was always if inflation comes out lower, we'll look for this direction. But guess what? If something else happened later, we're going to see reversals, right? So focus on the news headlines. The news headlines is what's really causing it. Plus, we got the Kevin Walsh disappointment too, but not a lot of people yeah, like they're not focusing on that. You know, they just see the inflation print and then they're like, "Oh, this data is bullshit." This guy on YouTube that says SVG setups is better. So that's how 90% of people are. So like that's why I said like most of you guys don't hear the horror stories of what people go through. You just see their highlights, right? But you be following somebody that like, man, this guy's fucking killing it, and then he's messaging me that he blew his fucking account. And I'm like, damn, like, and why are you fucking having a group teaching people how to fucking trade? And you're the part of the problem, you know? Like, so I deal with that a lot. And I'm like, damn, like this is fucked up, you know? And I deal with that a lot, you know? So I see the horror stories, but like it's easier to show how good you're doing like in front of the world, but I see the horror stories, you know. And guess what, they all trade the same way, you know. It's all just the technical setups and all of that shit. They all trade the same way, because when I ask them, I'm like, "Oh, like do you focus on fundamentals?" It's no. They always say no. It's not a person that says like, "Oh, I focus on news, I focus on data, and I blow my account every day." No, it's never that. It's always the person that only trades technicals only, that focuses on one chart, that don't focus on risk sentiment, that don't focus on news headlines. Every time I talk to somebody, it's always they trade the exact same fucking way. ORB, yeah. Yeah, ORB, yeah, exactly. So that's where like I know that that's the problem. You know what I mean? Because I just ask myself, I go, damn, like if I go to these institutions where they have day trading desk, do I expect they trade that way? And guess what? Some of them are stupid. Like, yeah, I met a person that trades gold, and he's investing like over like I think he had like $10 million of investments of people's money, and he's using the what is that YouTube shit that everybody trades that's free on YouTube? He trades that shit. And I couldn't believe it. I was like, damn, like I used to think people like in this world was like geniuses, but no, they just accessing money and know how to trade is two different things. But yeah, it's crazy. I've seen trading the SNR. Yeah, like and like in India, they only trade their like indexes. Like, yeah, but like that's why like if you look at the story with uh Jane, what is it called? Jane Street. They was only trading the Indian stock market because they knew how to manipulate it. Yeah, good job, Liz. Support and resistance. Yeah. I mean, but the indexes, that's what it's mostly about, is support and resistance. Like, but when you can't really do that like really well with currencies or with gold, but with the index, you could trade support and resistance. Like you could trade it that way. But and then it also depends on how you take profit. Like just right here, right? You could bought at support, take profit, sell at resistance, take profit. So you could do that because that's how majority of people are trading equities is buying from a low and selling from a high, because they're taking profit at a high, they're taking profit at lows. So that's why the index is a lot better from trading from that perspective, you know. But this today is like it's just a complete risk off market across the globe. So everything is pushing lower. Everything, like dollar is lower, gold is lower, equities is lower, everything is lower today. But yeah, like good job today, guys. But yeah, like I said, it's just, again, you just get the highlights. You know what I'm saying? Like nobody's gonna be vulnerable to talk to a random person and just go like, yo, man, this is what I'm struggling with. You know, nobody's going to do that to you, because it's like they're not looking at you from a perspective to help me. They're looking at you from a perspective, let me impress you. So of course, like they're going to be fucking killing it, and they're going to come from you from that perspective. Like there be people that talk to me like, I'm like, damn, you rich as fuck. Like, what's going on? And then it's like, okay, I get it. Like everybody has their problems, you know? So that's why like nothing really surprises me. So I just like to help, but just always remember, it's like nobody's going to talk to you from a perspective of let me be vulnerable because I know you could help me. They're going to talk to you from a perspective of let me show you that I'm fucking killing it, and let me brag, and let me just like show you that shit is easy for me. But 99% of people is going through a lot of problems. You know, trading is hard because it's more emotional. Like the problem that we're facing is that we want shit now. You know, that's my problem too, and I still face it to this till this day. But that's why we put higher lot sizes. We over leverage, you know, like we're trading nonstop is because we want the life that we always wanted now. Like you want this trade right now to be the game changer, and that's 99% of the problem. Like if you stop focusing on the markets that way and just build your character, just make right choices, you know, use proper risk management, it would fix 90% of your problems, because risk management is the only thing that matters, because risk management is what keeps you in the game long term. But we live in a society that want things quick, fast, and easy. Like these prop firms, it's like you want to pass it, right? You don't want to take 3 months to pass a prop firm. So how you got to do it? You got to increase your lot sizes, right? Like it's just how it is. You got to pay your bills coming up. Oh, I got to make this money now. But that's 90% of the problem, is that we fail with patience. You know, so patience is like when you every day in life, just like, how could I better my patience? How could I make better choices? Right. And it's just like, stop feeding the dopamine, right? Like if you're struggling with like simply is like a lust problem, it's just you're trying to satisfy yourself immediately. That impacts how you trade the markets, right? So if you're like, if you have to stimulate yourself immediately, then you're trying to stimulate yourself in the markets. So that's why you over leverage. That's why we have a lot of problems, right? So we got to work on that shit. So stimulation is bad. So make a good choice. Like before you're trying to stimulate yourself, like it could be with weed, it could be with liquor, it could be with talking to the wrong people, it could go with going out, right? It could be with porn, right? Before you stimulate yourself, make the better choice. Okay, what can I do outside of that so I don't have to spike that dopamine? And then that's when you start retraining your brain to be patient, to not focus on quick rewards, to not focus on quick habits, right? Because that's what it is that you're over leveraging, is because you're trying to stimulate that quick reward. You're trying to get that quick dopamine, you're trying to get that big lot size. So that's where a lot of us struggle with. So that's why, like your whole life, you've been stimulating yourself to get what you want immediately, that instant relief. So you're not going to fix it in a day, right? It's going to take day-to-day practice. So you treat yourself like that, you know, like you're trying to improve your character. And then guess what? You're going to start lowering your lot sizes. You're going to make better choices in trading, because you know everything. So the hardest part is just the execution, you know, like taking profit. Like that's what I had earlier. It's like we had this big move on gold quick. And what was majority of the people's problem? It wasn't the entry, it wasn't the news, it was just taking profit. So everybody struggles with a greed. You see what I'm saying? It's like, could I hold this shit for 3, 4, 5 days? It's like, damn, bro, like that's the most that's the biggest move, the quickest and the most pips you have gotten in like 3 weeks. And then you still want more. right? So that's what shows is that we all struggle with the same things, even when we're winning. So it shows like winning is not your problem. It's not the fact that you don't have $1 billion trading account. It's not that. It shows that even if you had that, you still won't be satisfied. So what is the problem? So that's where you have to, like, after this call, like read yourself and figure yourself out. Like, okay, what is my issue? Because if I had $1 million account right now, I had $1 million bank account right now, will I still be trading this way? Will I still be over leveraging? If your answer is yes, then it shows that the money is not the problem, right? So it shows like, okay, so why do I struggle with this? Why am I not satisfied? Why I'm always looking for that next hit, that next dopamine, that next spike. So that's 90% of our problem, is that we're looking for that. It's not the account size, it's not your bank account. Because again, if you was rich as fuck right now, would you still be blowing your trading account? If the answer is yes, then it shows that more money doesn't fix your problem, right? So that's why a lot of us struggle with trading, is because we don't know what's our problem, right? We think that, oh, trading, our problem is that I'm not flipping my account. Even if you start with $500, you turn that shit to 50,000, you're still gonna blow your account eventually. Like, because because it's like, it's not the more money you get, the better you're gonna be. So it's like, what could cause me to be a better trader today? Well, like, what is like spiking these habits of why am I over leveraging? How come if I take a loss today, I still have to take another loss, I revenge trade? So what's going on, right? Because if you have a shit ton of money in your bank account, like, making more money as a trader is not it. So y'all get what I'm saying, right? So that's where you have to read yourself and learn yourself. And that's what's scary about us as humans, is that we don't examine ourselves. We like to judge and examine other people, but what about you? Like, figure yourself out, like, learn your habits and learn what you struggle with and what you're good at. And then, okay, like, how could I get better at that? And then make that your daily life. Is like, okay, let me get better at this. And that's how you could start changing your mindset. I was telling myself, if I can't build the account with my own money, then I don't need more money. Yeah, because if you haven't took $100 and just let me just try to maintain this $100, like, not even flip it, just maintain it. Most people can't. You know what I'm saying? Not even 100, but then they somehow think 100,000 is going to be the game changer, and it's really not. I want to make more money to be free, and a lot of poor people and children and free. Yeah, it takes a huge responsibility. But the thing is, you could be doing that now. Roy, I know you're probably, where are you from, Roy? Because I know you probably ain't broke as shit, and like, you, uh, source, I don't know what that is. Oh, you broke, yeah, it's different. All right, never mind. I thought you was in the US. No offense. But even if it's that, uh, yeah, yeah, those countries is a lot harder, but you're probably still doing better than majority of people, right? So I used to think that way too. I'm like, yeah, I want to make some money so I can help poor people. And then guess what my stupid ass does? I go to a gas station, there's a person sitting on a corner, and I don't give him $1. I don't buy him water. I don't buy him food. So what do I think? Oh, the more money I make, I'm going to want to help people out. And that's not true, because what you have enough to give to somebody, and you don't do that now. So what makes you think you're going to do that when you become successful? It's not going to happen, because that's not your character. Like, so as right now, I'm broke as fuck, but yeah, Naz is still going, bro. I think Liz is in Naz. So if I see somebody that's struggling in the street and my character is all ready to help them, even if I don't have it, then guess what? When I become successful, I'm going to just give that person more. Maybe right now, all I could give them is a bottle of water, but I'm going to do that because in the future, then I could give them a burger with the water. Then the more money I make, a burger, chips, and water. You see what I'm saying? So it's your character is now. More money is just going to inflate your character. It's not going to make you become somebody that you're not. It's not going to happen. If you're an asshole, you're just going to be more money. You're just going to be a bigger asshole with more money. But if you're a good person, you're just going to be a bigger good person. So money is just going to inflate who you are now. More money is not going to change who you are. So that's where people got it fucked up. So it's like, oh, I want to give now. Start giving to people now while you're broke. Because then that's how you start building your character. So yeah, so like that's what it is. So that's why like I was the same way and I had to change how I think. Yeah, I think Liz, I don't know if she took profit, but I know she was out. I was rambling a lot. But any of y'all took the gold cells? Yeah, I don't think I'll be able to record. I have to put this video on YouTube and then upload it. Yeah, we covered a lot. So like the corruption, the world corruption, trading, the recession. Yeah, we covered a lot. I don't want to put this video to waste. Yeah, like, and that's the thing. It's like not a lot of people want it, you know. So, and I understand that too. It took me a while to understand that. But if you guys want to change, you know, like you just like figure yourself out and it's going to happen. Like most of you have a good life because if you switch your problems with somebody else, you go, fuck, man, I want my problems back. You know, that's how it is. So you just have to like just figure yourself out and then work on it from there, you know? Yeah, like cuz you have the power to change now. Like that's the thing, you know, like it's not going to say like, oh, okay, I could change who I am when once I make money, once I become successful, that's when I could change. It's like, no, you could change the perspective of your life the next second, you know? Like nobody really taught me like the way I'm speaking. It's just from experience. Like I didn't really have like a I followed a lot of good people, you know, like I love Patrick McDavid, I love Myron Goldman, I love Andy Frisella. Like I listen to him a lot like during my journey. Like I listen to people like that. Like I never like it was not a person that was like me. Like I learned from like European traders, like they talk about the markets, they deal with fundamentals, but they suck at technical, they suck at trading entries, right? They could tell you about the markets, but they can't sit there and like break down price action the way that I'm doing. Like, okay, if this happens, take a sell. If that happens, take a buy. They can't do that. They could tell you like, oh, if it's inflation is higher, buy the currency. They could tell you that, but they can't give you like what I do for you guys every day, right? They can't do that. But that's what I learned. I was like, oh shit, I could do that, which is a difference. That's why I could have a group like this. You know, not a lot of people can because they can't do this on a daily scale, right? And you guys been here for like over a year, right? 2 years. It's very hard to be like it. Like the opportunities are there. Like it's very hard that I'm completely wrong. You know, like the difference is if I did the call earlier and then haven't done another call afterwards, everything just drops, y'all be like, what the fuck is going on? But now y'all here, y'all could understand why everything is red. So that's the difference, right? But on social media, I just do a video about lower inflation. Oh, equities gold should be higher. It's not happening. Everybody's like, you're a fucking idiot. So you see what I'm saying? So that's the difference. So that's why you can't really judge a book like that because you're not there, right? So I had to understand that too. I have so many people making it in life, like you, for instance. I've been training for like 10 years, but it took me long because I was a huge fucking mess. Not too much I couldn't figure it out, but 2 weeks inside, knowledge and get real. Yeah, that's what happens. Nanich. I think thanks for that. Like, and I hope you can share that with others too, because people give up because it's like overwhelming. But like, soon as they stay, then they're like, oh, okay, it makes sense. Yeah, I think there's a way you could say you could check and WAP. Like about five, yeah, about 6 years or 5 years. Yeah, I've been failing for a long time. It was like 4 years. Like, but I was like you guys. I was just still show up every day, blowing my account, like stressed the fuck out, losing money. Like I was the same way. But I wasn't to a point where like I was ruining my way of living. You know what I'm saying? Like I wasn't like, oh, I can't pay my rent now because I blew my money on a trading account. It wasn't like that. But I used to always like put like $100, $200 and blow it like that. And then like I was following all the wrong people. I was like, damn, like how come these motherfuckers are killing it and not me? Like what's going on? And then, but understanding how life is, I was like, once I realized, I was like, how this person living like an NBA player, and he shows me no work ethic, no skill, no nothing, but then he's living like an NBA player. But then that's when you realize, like, oh, this motherfucker's selling. He got his own broker. Like, yeah, he got hundreds of thousands because it doesn't matter where you're from. Like when they make money from you buying a trade, selling, depositing, right? They make money from that. When you lose, they just take the profits. So it's like I was like, oh, that's how they make the money. They own the brokers. Like, yeah, they'll do signals for like 3 months and they stop it. So it's like, yeah, like I noticed it, but I was like, man, I gotta stop following these people. And that's when I started getting into like learning about economics and learning about fundamentals and learning about this shit. Because when I first listened to somebody that was doing real well, and I was like, damn, I see this person come up, nice car, all of this shit. And he was like, man, fuck fundamental. You don't gotta learn about news and none of that shit. Look at me. But then majority of the people in his group wasn't doing well. So I was like, oh shit, he's the only one doing well, but nobody in his group. So that's when I realized, like, okay, let me stop following these people, and then I started paying attention to the right guys. I could ask you right now, do you know who Alan Greenspan is? Most of you won't know. But if I say, do you guys know who Lambert Raoul is? All of you know. Like that's a huge fucking problem, you know? So it's like you don't even know the chairperson of the Federal Reserve, right? Like it's like how you don't know anything about like so it's like damn. So all your knowledge is going to go based off of what you know. But these good guys is really good at social media, so I can't blame you because I used to fall for it. But now it's 2026. It's not early 2000s. Like that you listening to somebody that's fucked up. I'm sorry to be blunt, but it's like like by now you should know. You're just being entertained. You're not being influenced. You're not being motivated. You just look like being entertained. And you got to stop that shit. And it doesn't matter if it takes you 10 years, like you're still here for a reason. So it's just habits that you have to break in order to change who you are. You got to break these habits. So it's like you got to listen to the right stuff, like focus on the right things, like just focus on being right. Don't focus on money, like listen to this stuff. Yeah, like as they sell a dream, then there is one thing you need to hit face to face and correct. And most of the time, put it on the table, open it up, and stop it. Like there's the only way. Yeah, exactly. If I tell you guys what do you do right in trading, what do you do wrong? Yeah, I know exactly what to write down. So it's not like it's a secret. You know the things that you should be doing in life and what you shouldn't be doing. So the thing is, are you going to do it? That's the only thing. But you have to change your habits. You have to change the way you think. Start off like erasing, changing your algorithms. Fuck the social media shit. Like if you're not trying to sell nothing or try to promote anything, then fuck you want it for, right? Unless you're just trying to like, if you're listening and learning from the right people, that's different. But if you're not, then what do you want it for, right? Like you're just trying to stimulate your mind, and that's the problem. You're just looking for stimulation. So read a book, read the markets, like educate yourself, like go on YouTube and focus on like, oh, like let me go listen to breakdowns or let me look at updates and stuff like that. It's not stimulating you. So that's why you're not focusing on it. You see what I'm saying? So once you have to change how you think. And then that's where things start to open up for you. It's not going to change everything overnight, but it's a start. And that's where you have to start. And that's when you start making better choices. Because that's the secret. It's like, oh, I want to make the best decision now. You got to build yourself up. And then when the question comes like, oh, how do I double my account size now? How could I put more money in my bank account or put more money in my trading account? How could I increase my lot size? Like by the time you start making the right choices, you would know when to start doing these things. You don't have to ask. You would know. So that's why it's important. But yeah, good job for you guys that took equities, gold sells. Like that's playing out. Yeah, guys. All right, guys. Whole family is at the pool. I'm gonna upload this though. I'm gonna upload this on YouTube and then I'm gonna send it to you guys. So, because I know this is dumb long, but I'm gonna just I'm gonna just do that. All right, guys. See you guys in the chats.